All right. Hello, everybody. Welcome back to another Market Open. It is Thursday, March 14th, 3:47 p.m. Very, very interesting market. Got a lot of stuff that we're working with here today. Lighting is not the best because the light on this, I don't know what you call it, tube light, photo light, studio light just popped. And I should have known it was like blinking in the morning. So going to have to order another one of those. The lighting may not be the best, but my personality is very bright. So it should be able to shine the stream. Dude, I'm too good at this. Like, I'm just like, I need to go into like wordplay. Is that a job to do wordplay or something like this? This is ridiculous. All right. So Tesla is falling. Tesla's falling pretty badly. Right now we've got Tesla. Where do we have Tesla? Apple actually is up today, 172. Tesla right now is 161. It is 45 cents away from the 150s, 159 range. Didn't get there. SoFi is 1 cent away from under $7. We'll talk about that. Nvidia is down 4% of the day. MicroStrategy is down 7.72%. Celsius down about 3.46%. Palantir 28 cents away from 23. And then Robinhood could not hold 18 yet. 17.93. It's struggling for that $18 range. We'll see if it gets there. Right now, that's still up 4% of the day, which is relatively amazing given how red the broader markets are. We're going to talk about why the markets are red. We're going to talk about Tesla. We're going to talk about Bitcoin. Adobe earnings. Maybe we listen to that live stream. The only reason I say that is because generative AI, maybe they say some stuff that's exciting. So actually curious to see what they say. So let me know if you guys want to hear that one. And we'll listen to Adobe. And we'll keep going from there. But we got a lot of stuff to talk about here on this, I guess, red market today based on what stocks you are in. Thank you, everybody, for being here. Valerio, Damien, Alex Karp. Thanks for being in the chat, Alex Karp. A big fan of you. Ray, Eric, Belly, the Colorblind Collector, Kelly, hello, June, Daniel says, what's the bull thesis on Tesla? We'll talk about that in a minute. It does seem like we are in a free fall. Kelly says salutations. I like that. I'm stealing that. Salutations. Maybe I should start every market open stream with salutations. Dude, yesterday, the way we ended the market close, does anyone remember? It was a very funny joke at the end of the market close. And maybe we should end the market close every day with that joke. I'll say it in a second. Garcia, Bay Ray, Astricus, Peter, Harmsy, Charles, Endless Awareness, Mike K, Raul, what's up? Thank you for being here. General Wiener says Tesla's the next Cisco. Oh boy, we are getting to some fear in the broader equity markets. All right, salutations, everybody. The orbital velocity of the market today has not been that strong because what we're seeing right here is a pretty red market. So first, there's a lot of things I want to talk about. Number one on SoFi. If you were here on the market open, you saw that I had sold 5 cash secured puts yesterday for a $7 strike on SoFi. What does that mean? That means I'm betting against the market that SoFi will not be $7 by 4 p.m. tomorrow, Friday, March 15th. And if not, I get to keep the premium. If it's $699.9, I have to then buy $3,500 worth of SoFi, 500 shares at $7 each. I don't want to do that. I could do something with that $3,500. I don't need to buy SoFi. I don't want to buy SoFi. So you're going to say, Amit, why did you put yourself in the position to then maybe have to buy SoFi? Because I didn't think that a stock that was already down almost 25% in the past 2 weeks could go down another 5% today. Now, granted, the whole market's down. I get it. But I feel like if the whole market's down, the hedge against the whole market being down is that, freaking PayPal's green today. If you're SoFi and you've already took enough abuse from the market that you would kind of be a little resistant to more abuse. But no, SoFi just fell with it. So in the morning, we closed out those puts. I bought them back. I lost basically $25 on this trade. Didn't want to lose the $25, but it is what it is. And now we don't have to worry about potentially having to pay $3,500 for these damn shares. But the fact that this is getting this close, it didn't get this close. It got to 709 when I sold in the morning because I just didn't even want to risk it. It just got to 701, or actually got to 7. Didn't hit 699 yet. But if tomorrow's a red day, tomorrow's a Friday, maybe we don't get a rebound, then, it's still going to get ugly. So we'll see how this ends up playing out. But right now, SoFi also not really doing the best in this current market. Okay, so that's SoFi. Let's talk about Tesla. So actually, Tesla's right now 161.94. Tesla down another 4% today. Look, Meet Kevin looks like a genius right now. Whether you like it or not, Meet Kevin said, I'm going short at 169. And so far, the short seems to be paying off. Now, I had a couple of questions today on Twitter, and I want to show you some responses that people said. Well, this is the main one that I want to share. I said, at what price do you really buy Tesla? Oh, someone saw it hit $699. Wow, I didn't see SoFi at $699. That is crazy. What price do you buy Tesla? right? So I said, I know people are nibbling here, but is there a certain target where you start really liquidating your other positions? You sell your PayPal, you sell your Celsius, you sell something to buy more Tesla. I did not buy any Tesla, by the way, today. So a lot of people said 140s is what they're looking for. Income Shark says every $10 drop, I buy more. That way I don't miss the window. People calling for sub 100 will most likely get front run. That's one perspective. There's like 70 other comments from people saying, no. This thing's going below 100. It's going to be a slow bleed. And not just random accounts, some accounts that I really respect as well, kind of saying, look, we do not see this thing holding up too well. And then a lot of people like Ashish here said, I want to punish them. These effers are not holding their deal on supercharging and the FSD transfer. Would rather use my cash to buy stock and then pay for the car in Q3. I mean, you've just got a lot of people saying 140 to 130. That's when they kind of think of loading the boat. A lot of people did buy today when I said, are you buying the dip? A ton of people bought. I'm sure a ton of people in the chat bought, but people are really waiting for that 150, 145 range to really get into Tesla. My perspective on this is that I do think buying the dip right now is not insane if you're buying Tesla at 160, because, waiting for 140, 130, it just kind of feels like back in January 2023 when Tesla was at 113 and everyone's like, oh, I'll wait for 85. It's like, I mean, if you were there, you remember that's how bad sentiment was. Sentiment was pretty bad today. The only difference here is that the entire market took a dump. So I do feel like Tesla being down independent of the market, like if Nvidia wasn't down 5%, if Palantir wasn't down 3%, if Tesla was itself down 5%, I would say this is getting really ugly. But Tesla kind of fell with the macro today. I mean, there wasn't any news that came out about Tesla. Elon didn't tweet anything crazy. So to me, if we get a bounce tomorrow, like a regular bounce, the whole market should bounce. And then Tesla, maybe should survive in that 160 to 170 range. Now, the counter argument to that is that this pricing range is irrelevant. It is inconsequential to Q1. Q1 is going to show earnings that basically makes Wall Street realize that this is a car company and there's no FSD yet. The bots are a pipe dream, and robotaxis are also another pipe dream. What's going to be really curious to me if margins compress and volumes go down in Q1 is Cathie Wood buying? That is going to be incredibly important to me today. I want to know if Cathie Wood is buying Tesla, and I want to know if Cathie Wood is buying SoFi. I think if I had to guess, I would say she's buying both. Because they're both down aggressively today, and those are two of some of her larger holdings. But we'll see if that's the case. Here's RBC, who is actually bullish on the stock and thinks that the street is completely getting it wrong. Then we'll have Adobe in about 6-7 minutes when the market closes. Here we go. Chima says Bob Iger is smiling right now. Oh boy. Oh boy.
Ryan has a buy rating, price target of 298. Joins us right here at Post 9. Not going your way today. Tom, why do you feel like things are going to turn for this company?
Wait, hold on. This guy's name is Tom? I love when I see Indian people named not Indian names. It's always interesting to me. All right.
Turn for this company.
Yeah, I mean, look, this company is in between two waves, is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know very well. He's looking at things from a years, if not decades perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
Okay, now I didn't like when he said this. You'll see later in the clip, he starts talking about how folks like me, when we write things, people will listen. And I don't know, dude, like it just felt very arrogant and kind of like so elite-y, Wall Street-y. Like you'll hear later in the clip. I was just like, why are you saying it like that? Because like, yeah, you have influence because you work at RBC, but the way he presented it was very off-putting to me. I don't know. Let me know what you guys think when you get to the end of this.
Jazz?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today. If you guys ever used FSD, I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not even enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just an auto company.
Right. You can sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where the stock will be a year from now, not next week. So, yeah, you're right. And the other issue is, while I think they'll hit the volume target that the sell side has, I don't think it's that aggressive, actually, for 24. I think that'll come from price cutting, which impacts profitability, and that's what everybody worries about. So you're right. Near term, definitely challenging. Elon says it all the time, right? But again, you got to have a broader view of it. And I don't know about you, I can never time this thing, right? So it pops when it pops, right? Somebody like me writes a big report and everybody gets excited, and that's the narrative that changes things. Near term, though, I just don't know what the near term catalyst is from a data point perspective that re-rates the stock.
What percentage of your valuation model is the core auto business?
10%.
10%.
Yes.
And the rest is energy,
Autonomy and energy.
AI,
mostly autonomy.
Mostly autonomy.
Yeah.
And what about AI robotics? Or
I don't include robotics in there at all.
because
right.
Because of the risk you might do it elsewhere, or something
We
else?
just don't have any evidence of a product that's out there in the market making money. Energy storage is already making a bunch of money for them. And autonomy, they do have an FSD product, which is really compelling. And they're charging $200 a month for this product.
How about China risk? If in fact things really, I mean, TikTok's just one example of tariffs. What may happen a year or two from now?
Yeah, no doubt. It's definitely a risk right now. We saw the Q1 numbers. I think those have to come down on deliveries. A lot of that is China New Year. But look, structurally, it's 40% of their volumes. But at the end of the day, their product that they sell, they do have better profitability than any other car company, maybe besides BYD, right? They should do well long term. And again, auto business, 10% of my valuation, right? It's really an autonomy business and an energy storage business.
So you got my point, right? You got my point. Like he kind of he kind of felt very like if I talk about it, well, people will start listening. And I'm just like, you're supposed to not say that. You're supposed, like, Dan Ives doesn't go like, well, if I say something, it's so special. It's like, no, but like we know it's special because you're Dan Ives. That's how you build a brand, not telling people it's special because I say. It's like, it was so weird to me, dude. It was very weird. By the way, everyone comparing my beard to him, I just got a haircut. So that's why if you saw me in the morning, like, go watch the market open. It's a mess, dude. I delayed my haircut for like 6 days this time. I usually get it every 2 weeks. So today I was like, all right, I gotta get the job done. Robinhood making a little bit of a comeback, 1804, up 5% right now. It is Thursday, March 14th. We have 10 seconds until the market closes. Nice close for Robinhood. I have a couple thoughts I want to say on Robinhood. I think there was a lot of demand today, a lot of stuff I saw in the technicals. So you got Robinhood 1805, Apple 173, Tesla looks like it's going to close down 4%. 4 p.m. March 14th. Market is now closed. All right, Tesla's down 162, down 4% on the day. Robinhood ending above 18 is fucking bullish. And the reason it's bullish is because I was looking at this sucker all day and I saw it dip to 1778. But before it got to 1778, it got to 1789, 1794, and it kept fighting and it came back to 1805. Then when it got to 1778, that was about the time where Bitcoin right here fell to 68,500. Bitcoin right now at 69.4, so falling below that $73,000 level, down 5% on the day. That is also why the market is kind of shaken up. I was like, okay, Robinhood's not going to close above 18 because, boom, it's like Bitcoin's down, Robinhood's down. The fact that it rallied into the close means there were a lot of buyers. And I looked at the order book volume at 1794, 1797. So there were like tens of thousands of shares waiting to scoop up shares in that 1790 range. So I think the floor might have changed. I could be wrong, but I think it might have changed for Robinhood to the 1790 18 level. So it was a strong close we're seeing as the market is closed for today. UiPath down 7% on the day. Good earnings, not enough for the market to reward them. S&P was down about 0.2% of the day. Nothing too crazy. 514. Snowflake, wow, down another 2% today. Did not see Snowflake falling today. I did not see Snowflake actually falling today. I haven't looked at Snowflake all day. Wow, 158. I thought Snowflake was in a SoFi situation where it had taken so much pain that it was kind of done with the pain, but nope. Snowflake now down from 230. Basically losing how much is that? 80 points since earnings. Rumble down 8% on the day. SoundHound down 3% on the day. It was up about 40% yesterday, including after hours. Ethereum 3,800. Palantir 2446. Nice rebound as well. Palantir was at like 2418 just like 20 minutes ago. So nice rebound into the close for Palantir. Nvidia down 3.24% of the day. As we get into the close. Mag 7, Google was up, actually had a great day, up almost 3%, 144. Remember, Google started falling around 152. So Google's kind of making a recovery from 152 to 131, now back to 144. Amazon 178, Tesla again down 4% of the day, Nvidia down almost 4%. Apple also a nice recovery, 1%. Apple was at 168 about 3 days ago. Microsoft all-time highs. Microsoft actually hit all-time highs. Or sorry, well, 52. Yeah, basically all-time highs, 52-week highs as well at 427. Microsoft right now at 425. Why is Microsoft up 3% of the day? I don't really know. It seems like the market kind of rotated out of Tesla into Microsoft. Maybe that's kind of what happened. But that's what we had for the Mag 7. Then if we go to the crypto stocks, took a little bit of a beating. Coinbase down 7%. It's had a hell of a run. Obviously, it's going to take a little bit of a breather. That's fine. CleanSpark down another 7%. Marathon. Jesse sold out of all of his Marathon. Not sure exactly why, but I did see that he posted he sold out of all of his Marathon. Something about like lack of transparency and with the company. They're down 7%. Hut 8 Mining down about 6%. Cypher down 6%. MicroStrategy down 5%. I have a clip I want to show you guys about MicroStrategy in a second as well that really explains what Michael Saylor is doing. I found a clip of him from 2021 speaking. It's a 3-minute clip where he describes this whole strategy of collateralizing the company to be able to buy Bitcoin. And I think it's pretty insightful. But that one also down about 5% of the day. And then Robinhood right here, 1805 after hours up 5.19% on the day. Not a horrible market close. Not a horrible market close. What happened to Dollar General? Did they fall? They had a good earnings. They went down. Wow. They went down 5%. They had a good number. They beat on every metric. Maybe I'll have to go deeper into this stuff. Maybe, I mean, I think it's probably more macro because everything was falling, but maybe the guidance wasn't the best. But I thought they beat on pretty much every metric, including sales, EPS, and obviously revenue. Amit, what do you think? Do you think money is leaving SoFi and flowing into Hood? I think money's leaving SoFi and going everywhere besides SoFi. I think the problem right now is that SoFi, and I say, oh, by the way, I did buy some you know those $17, $20 spreads I bought on SoFi? I bought like 30 more of those because to me it's like a lottery ticket, dude. If SoFi even gets to 10, 12 bucks, this is going to go up like, 30, 40, 50%. So I bought, I now have 141 of these calls. It's basically a $3,500 position. And this is sort of my main exposure to SoFi. I bought them at 21 cents. The average was like 25 cents. So I did pick up some SoFi because I think it's stupid that it's falling. But the reason I'm not like loading the boat or having a super, super heavy, buy 1,000 shares here at 7, but like if Palantir again falls to 18, I would buy 1,000 shares tomorrow. Like I would just like, I would go for it. I don't believe in SoFi that much to buy 1,000 shares. I don't even want to get the fucking 500 shares I could have been assigned, potentially if it falls below 7 tomorrow, because I think right now they don't have a catalyst. I think it's going to take them a few months to get that catalyst. Maybe it happens in the next few weeks, right? But so far, you can't tell me what the catalyst is on SoFi. It's really hard to kind of describe. It's not the NBA partnership. Adobe is down 2% after hours. Let me pull up their numbers. I don't think they're out yet, but let me see if they are. And so if I don't think there's a catalyst for SoFi in a world where there's a catalyst for a lot of other companies like a Robinhood, with interest rates coming down potentially and crypto going up and then them just executing against their thesis so well. And then there's other stocks, obviously, like a Google with a rebound, a Microsoft and Nvidia on the dip. Like there's just other HIMs, right? There's players out there that are more exciting. Even Apple, right? From 167 to 172. That's a little bit more exciting than a SoFi. So I just don't think there's a catalyst right now. And that's why it's a little hard to get excited about it. Ian says, is this a start of a market correction? I don't think so. This could be a start of a little bit of a market pullback. That's totally normal. I think 5% is reasonable for a pullback. 10% is a correction. I don't think we go down 10%. All right, Adobe's down 6%. I'm trying to get their numbers. What do we have on Adobe? Why is it down? Nothing on Twitter yet. On their investor relations, nothing there. Let me pull up CNBC, see if we get that. Adobe's actually an interesting one. Let me know if we want to listen to their call. I've never heard the CEO talk. Well, actually, I have in an interview a while ago. He's a decent talker, so I don't think we would get too bored. And also, it's generative AI. I kind of want to see what is their plan to take on OpenAI and Sora. And, well, Sora is OpenAI, but you know what I mean. I want to see what they're kind of thinking for Adobe. Okay, so we don't have the earnings yet. CNBC doesn't have it either. The Street seems to have it. It's down 7%. Now, Adobe's a big company, guys. Adobe's a $258 billion company. So getting it down 5-7% is a decent amount of shareholder capital kind of that's leaving the company, right? Market cap's definitely going down on that. This company, the main catalyst for them was that they didn't buy Figma. Figma's a startup that was worth $20 billion that they agreed to buy out. It's in the design space. The EU said, hey, you're not allowed to do this. You're going to become too powerful. So Adobe was like, all right, so we're not going to do it. And then investors got super excited because they were like, well, you get to save $20 billion, right? The stock was at 275 September 2022. Now it's at 570. So a decent return since then. But the question is, can they stay alive in the world of generative AI with all these other tools that are out there? I think they're going to thrive, but the numbers right now might not be the best in the short term for Adobe. Everyone wants to listen to Adobe. All right, we'll listen to Adobe. That'll be a good one. We'll listen to it. Still don't have the numbers yet on Adobe. The other thing about Adobe that's interesting is Canva, which is what I use for my thumbnails. And like, I love Canva. I pay $13 a month for it. Canva's super cheap. The problem with Canva is their last valuation was $40 billion. Canva's not worth $40 fucking billion. Dude, Palantir is barely above $40 billion. So you're telling me Canva's worth it? So they raised in 2021 during the ZERP era. They're not worth $40 billion, but it's a good product. I don't know if it's massive competition for Adobe, but it is, competition. And their generative AI product is super easy. Like I type in girl on a horse and a girl on a horse pops up. So Canva, I think, also is a decent product in the space. All right, Adobe revenue, 5.18 billion versus 5.14. That's a beat. EPS, 448 versus 438. That's a beat. $25 billion share buyback. These companies don't know what the hell to do with their money, and they're buying back their own stock. You either think that's positive or negative. If you're an Adobe shareholder, you think that's very positive. But why is the stock down? Why are they down 6%? What else did they announce that got the street upset? You guys can see this, right? You can see it? Yeah. Do I have the numbers? Yeah, I have the numbers. All right, here we go. Here's CNBC. We have the numbers.
Look through your notes. You use the word dangerous a lot. What I wonder is, what is dangerous about this market?
That people are too bullish about technology and momentum. Momentum works until it doesn't. We have a lot of evidence that this rally has been way too focused in the top names, that they are way ahead of the rest of the market. There are indicators of market sentiment that are at record lows for bearishness. In other words, you have to go back to 2019 to get this low a percentage of people who were bearish on the market. Barron's just had a very bullish cover. That's not a good sign when Barron's is pounding the table. So I do not like the absence of fear. That's a little dangerous to me.
All right, Charlie, hold tight. Adobe earnings, as we mentioned, are out, and Christina Partsinevelos has the numbers. Christina.
Yeah, it's a beat on the top line for Q1. We'll say $4.48 EPS on revenues of $5.18 billion. But you can see the stock is down 7%. Why is that? You're seeing Q2 revenue guidance coming in a little bit light. And then a key metric that many were looking for is their net new digital media annual reoccurring revenue. The boogie number for that for buy side was $440 million, but for this report, we're seeing $432 million. So a little light there. The company also announcing a $25 billion buyback program as well. So shares still down over 6.5%.
Yeah, we're going to get more on that. Thanks, Christina, when we speak exclusively with Adobe CEO Shantanu Narayan in just a few minutes.
That's a hell of a beard. That's a hell of a beard. All right, so we'll get to that interview in a second. Let's look at this stock. Wow, so guidance is what screwed them. I don't think that's they're down 7% on that. That might be a big dip for shareholders that they actually want to participate in, because guidance is guidance, dude. I mean, like, guidance is, I don't know if that's the biggest thesis to sell off the stock. Now, if the shareholders think that guidance is low because of a pattern that they're seeing in terms of their business in regards to either competition or not enough subscription sales, then maybe there's an argument for why the stock's going to be on a downward trajectory. But they beat on all their numbers. The buyback is really exciting. $25 billion buying back. That's what, 20, that's a 10%, literally 10% of their float. They're buying back. I mean, that's bullish to me. That's exciting. Very, very weird that the street's tanking it that hard on that. And we might see this reverse. I mean, this is what we're seeing this earnings seasons as well. I'm not buying Adobe if it sells off, because I don't understand this business. Like, it's like price to sales of 13. I don't know if that's crazy. PE of 31. I don't even know if that's crazy. Those numbers on the hip don't seem that crazy, but I got to study this business if I were to even think of getting into this dip. Now it's down 8%. Yeah, it's getting hit. It's getting hit right now. They missed on guidance. Joking, Pokemon. They missed on guidance. That's why it's down. Chana, hello. Thank you for being here. Okay, so that is Adobe. Tesla right now, after hours up a little bit, 162. Palantir, 2439. Robinhood, how's that doing after hours? NVIDIA is down another 0.5%. Robinhood, 1810 after hours. Wow. Guys, I'm telling you, I was really looking at the order flows. I was looking at how the stock was performing. I just had it on my other screen the whole day. And every time it dipped, it got eaten up. Like, there were people ready to buy. There was a lot of people ready to buy. So Robinhood showing some strength after hours is not bad, and closing above 18 for the first time in almost 3 years. Incredible. Here is the analyst that initiated coverage from Bernstein on Robinhood today. He came on CNBC, and I posted this video on my Twitter, and then I found out he liked it, and I went to his profile, and the dude is following me. And then I DM'd him, and he was like, good coverage on Hood. I was like, what the fuck, dude? I was like, I had no idea this guy was following me. But here's the reason that he initiated coverage on Robinhood with a $30 price target.
This morning, Bernstein's got him. Chugani got him. It's great to have you. It's taken a couple of years to get from 7 to 18. What needs to change to get to 30?
Yeah, so I think obviously the last 2 years were pretty challenging. They were kind of dealing with the active traders receding and sort of focused more on the asset side, which is why you're seeing the asset side of the business pick up. The interest revenues have kind of become almost more than 50%. I think what we expect now is more a risk-on side of the market to kind of turn on, and I think crypto is going to play a big part of that. We obviously expect the crypto market to triple from here, go to almost $7.5 trillion in terms of total market cap. And given, obviously, Robinhood is among the few brokers who provide a full suite crypto platform, we expect that the flexibility to kind of kick in with its sort of crypto revenues inflecting almost 9 times. So yes, it's been 2 years, I think, of fairly challenging period, given, we went through a fairly 20-fold hike in the rates, and the overall risk environment was very different. Going forward, we think crypto is going to lead that charge in terms of its transaction revenues inflecting. And I think that's what takes it further from here.
So it sounds like from an asset deployment perspective, equities up 41 is pretty nice year on year, but crypto is something entirely new. I mean, we should just back up and talk about that $7.5 trillion number that you see. That's almost a triple, right?
Yeah, so I think, where we are, we obviously got the big ETF launch on Jan 10th. This has been the most successful ETF ever. Almost 4% of total Bitcoin supply is now under Bitcoin ETFs. We're having record days every day. This is, as I said, by far the most successful ETF launch ever. I don't think it just stops there, right? I think the way these asset managers are seeing is they're seeing a full global digital asset management build out, right? So I think we get onto the Ethereum ETF soon. We can't exactly predict when that's going to happen. Obviously, everyone's looking at the May 23rd date, but we do think we get an Ethereum ETF this cycle. And then I think it kind of goes on to more interesting things like, broader active products, multi-token products, and so on and so forth. So what we project here is...
By the way, guys, we'll let him finish to the last minute. Robinhood just dropped 5% after hours. Adobe is down 9%. It looks like the whole market just took a crap after hours. Oh, now Robinhood's up. Wow, that was weird. So Robinhood was at 17.20. Now it's at 18.12. That was super weird, dude. There's probably a little bit of manipulation going on after hours on that. We'll get to the Adobe CEO in like 1 minute.
Something like what is a $50 to $60 billion asset management industry going to $650 billion, which is why you're seeing the likes of BlackRock and Fidelity snooping in, focusing here in terms of it being a fairly strategic priority. And I think that's what takes us to that 7.5 trillion number from where we are today.
What about some of the other broker platforms? I mean, couldn't they also be poised to benefit if we do see crypto go to $7.5 trillion as a market cap in your estimation?
Yeah, but I think it's also about being ready, right? So I think Robinhood has been fairly disruptive in the fact that they've kind of continued with its crypto platform through a very tough time. I think there were many broker platforms who were interested but have not really executed on those plans. Also, the fact that Robinhood's customers are 11 million active customers. They're active traders. They are young. They're self-directed. They trade equity options, which is their bread and butter.
Okay,
so the propensity for that kind of customer.
So again, basically, he's just saying Robinhood's traders are more likely to do that type of trading. We have Ulta Beauty earnings. Ulta's down 5%. Ulta's getting hit. Here we go.
Quarter, Ulta putting out pretty strong results here. Earnings per share of $8.08, well above the street's expectations for $7.53 on stronger than expected revenues. Those also coming in at $3.55 billion. The street was looking for $3.53 billion. Looking ahead for the full year revenue forecast is a range that looks to be above consensus and $11.7 billion to $11.8 billion. The street was looking for just under $11.7 billion. Although the full year earnings guidance, the EPS guidance of $26 $26.20 to $27 is a hair below where the street is expecting at $27 even. Comparable store sales up 2.5% for the quarter, transaction and ticket higher. And a notable quote here from CEO Dave Kimball talking about international expansion representing an incremental long-term opportunity. They're looking at different operating models and partners and geographies. So that will be something to watch for Ulta Beauty and listen more for on the call when we get to it. Back over to you.
All right.
Who shops at Ulta Beauty? Who shops at Ulta Beauty? That one, I did not expect that one to be down like this today. Again, their numbers are not horrible. Guidance is not the best, as she said, but that's why we're seeing some downside pressure there. We got the Adobe CEO who's going to be talking in a second. Let's look at some of these other stocks, then we'll get back to Adobe. But Ulta is now down. I forgot Ulta was having earnings today. I thought it was mainly Adobe. As you can see, I'm not a makeup connoisseur. That was a good one, dude. I was struggling for that word. I got it. Connoisseur. That's the right way to call it. So Ulta Beauty market cap $27 billion, down 3%. Price to sales of 2.6. That's relatively low, maybe because their margins are not that high. PE of 22. Let me pull up their growth rate real quick. I have this website from my boy Alejandro that I never use when it comes to stocks. All right, so let's look at revenue. Ulta revenue, they are yearly, they are growing. Oh, it's not horrible. 2022, they did 8.6 billion. 2023, they did 10.2 billion. Okay, so their net income last year was on top of 10.2 billion. They did 1.2 billion in profits. That's not bad. That's not bad. Those are not horrible numbers at all. I mean, it's not crazy for a $27 billion company. Now, Elf, obviously kind of kicking them in the butt when it comes to social media. I think Elf is half of Ulta's market cap, but growing way faster than Ulta, obviously because social media, TikTok, which, by the way, if TikTok gets banned, we haven't talked about the fact that if TikTok gets banned, some of these like direct-to-consumer companies, they are going to be paying Zuckerberg an arm and a leg, because where else do you go to get distribution if TikTok's gone? You have to go to Facebook, right? YouTube Shorts, I mean, like no one really cares about it. Dude, TikTok is a unique culture. The ads on TikTok are like people engage with them in that demographic. Like if that's gone in the US, they've got to find a whole different way to advertise. And Instagram is really the only player in town. Like you don't advertise makeup with search. I mean, obviously you do, but there's so many different creative ways to advertise something like Elf Beauty. So if they don't have the like thousands of TikTok influencers, there's definitely going to be some different strategies they have to do. Adobe is down 10%. Wow. Adobe's getting smacked, dude. Adobe's getting absolutely smacked. CEO of Adobe is now on. Let's listen to him. He is on CNBC. Let's see what he has to say. And again, we'll hear from him on the earnings call in about an hour. Here we go.
Joining us now in an exclusive interview is Adobe CEO Shantanu Narayan. Shantanu, good to see you. Beat on the top and bottom line for the quarter you're reporting. With the guide, though, the range that you're giving, the top end, 530 billion is right about what the street was expecting. And then on the digital media net new annualized recurring revenue guide for Q2, the street, it looks like, was looking for 461-ish million. You're guiding to 440. So what's your take on not just the quarter, but how things look from here?
Well, John, first to your point, let me start about Q1. And again, record quarter, tremendous profitability as it relates to how the company continues to perform. And I'd like to highlight a few numbers. RPO, which is clearly a strength of the underlying business, that grew 16%. So the fundamental business was very strong as it related to Q1 performance. When we look at the product delivery and everything that we've delivered as it relates to AI, whether it's in Creative Cloud, whether it's in Adobe Express, certainly things that we're doing on the enterprise with respect to Gen Studio, as well as AI Assistant that's both available right now in Reader, as well as in Acrobat. I think the company has done a phenomenal job of embracing what's happening with generative AI and making sure that we invest both in our models as well as we ensure that the interfaces that people use, whether it's Reader, Creative Cloud, or certainly Acrobat, that we continue to make sure that we're delivering great innovation for the customers. I think when you unpack the results, a couple of things that I would highlight. The first thing I would highlight is the usage of Firefly and AI generation within our applications, over 6.5 billion. So people really appreciate both the responsible manner in which we've created Firefly, and they're using it. So the adoption of Firefly, whether that's in Photoshop or in Illustrator, is really pretty good. When you ARR specifically, as it relates to your question, the thing to remember is that when you normalize it for some pricing actions that we took both in Acrobat as well as in Creative Cloud last year, we actually had record Q1 commercial net adds in terms of subscriptions, as well as the creative ARR, which is what people are focused on, that grew 20%. So, when I look at it, and I look at it from the perspective of the innovation that we've delivered, when we look at it from the results that we've accomplished, the enterprise traction that we're seeing as it relates to Gen Studio, as well as the forward looking, I'm really pleased.
Yeah, that's interesting, especially I was going to ask you about those Firefly generations. It looks like it's solidly $2 billion just since you reported last quarter. Now, give me some context here on the broader picture of customers. We've seen multiple reports from retailers, even discounters that have been doing well, where guidance is coming in lighter than expected from them. So what's the impact then on digital experience spend and even on creative spend when retailer margins might be under pressure? Are they leaning in to get a share of the pie, or are they easing up on their spending growth at least because the revenue opportunity might not be as big?
Well, John, we are going to have Summit, and I hope to see you there in a few weeks. And we're going to give a lot more insight into the innovation that we're unveiling. But I think big picture, people are really trying to do campaigns, and they want to understand how generative AI can be used to drive more personalization at scale, as well as accelerate the campaigns. But they are also looking to understand the efficiency of their marketing spend. And so, our marketing business had a very strong quarter. Tremendous, as I said, RPO and record revenues, again, in digital marketing. And so I think the emphasis on delivering appropriate personalized content to engage with customers, that urgency is only increasing and not decreasing. And whether you're a retailer, whether you're a financial services, whether you're a pharma company that's going direct, I think everybody is looking to see how they can engage directly online with customers.
Shantanu, it's Morgan. With the termination of the Figma acquisition in December, investors have been looking for updates on capital return, game plan for future M&A strategy. I realize you just announced a $25 billion stock repurchase program this afternoon, too. How much does that speak to that strategy now that acquisition isn't happening?
I think it's a great question, Morgan, and I think it just reflects that Adobe is one of these unique places where we can not only invest in our future, we're investing in these fundamental Firefly models. We're clearly the leader and pioneer in what's happening with digital experience. But given the cash flow and the profitability, that we will continue to return, excess capital to shareholders. When you think about it, we've returned, I think, something like $26 billion over the last decade, and we've announced that we're going to be returning another $25 billion over the next 4 years. So clearly, we are able to straddle both investing in the future and making sure that we focus on product while continuing to return excess capital to shareholders.
Basically, we couldn't buy the startup we wanted to buy for $20 billion so that we could really innovate and grow. We can't innovate and grow on our own, so we're buying back $20 billion of the stock. That's how I'm hearing it. They were going to pay $20 billion for Figma. The EU said no, so now they have to do $25 billion of their stock, which isn't really a bullish sign. Adobe now down 10.3%. And I mean that. Like, if you were going to buy a company, if you were going to spend $20 billion on a startup to take them off the market because you felt they were worth that much, not in a low interest rate era, right? You were going to buy them while interest rates were high, then obviously you felt that they were massive competition and that they deserved the premium. But if you can't buy them, then it's kind of scary that you have to buy back your own stock because your stock, at least at the time, needed the startup. That's like that. That the whole point is like we should get this company to help us grow because we can't internally grow because we're a bigger company, and that's what happens when you become a big company. It's hard to grow. So it actually there's definitely a bearish undertone to the stock buyback, dude. Like I mean, how many shares does Adobe have outstanding? That I don't think there's massive dilution there. It's not like they need to do a buyback. It seems like they don't know what else to do, and so they're doing a buyback. There's no dividend either, right? At least Meta announced a dividend. So it's very interesting how they're kind of going to frame this. And on the earnings call, we'll hear what they say. Bruning says, wonder if they drop below 500. Right now, they're at what, 510? I mean, yeah, dude, tomorrow, if this thing doesn't recover, yeah, this is going under 500. This absolutely has a shot, at least, of going under 500. Down 10%, down $60, dude. That means they just lost 25 billion of their market cap, right? Am I wrong? No, yeah, they basically so they lost a decent amount of $25 billion of their market cap. The market cap is 258 billion. They just lost 25 billion after hours. And they're buying back the stock $25 billion cheaper with $25 billion of buybacks. So interesting story here for Adobe right now. We'll go deeper into this number. Maybe the 10% drop is not warranted. We'll go deeper here and we will see. I use Figma for more than web design lately and I don't hate it. Yeah, Figma is a very popular product. Figma around the world is an incredibly popular product. That's why they were willing to pay 20 billion bucks. But, they weren't able to go through with it. Apple news. We got some new Apple news as well today. Apple has acquired a company. Apple has acquired Darwin AI, Canadian AI startup. Darwin AI has developed AI technology for visually inspecting components during the manufacturing process and serves customers in a range of industries. But one of its core technologies is making AI systems smaller and faster. That could be helpful to Apple, which is focused on running AI on devices rather than entirely in the cloud. This was actually an interesting acquisition. It was probably sub $100 million, Bloomberg was reporting. But if Apple is totally ditching the car and they're going all in to generative AI, they've got a boatload of cash to be able to spend on little startups like this that can help them really be able to accelerate their AI vision. And in my opinion, the Vision Pro is kapooey now. It doesn't really matter. So if they don't get an iPhone that has AI on the phone, on device, then, I don't know where the growth is coming from. So Darwin AI seems like their newest venture. It seems like they probably acquired a lot of these startups we haven't heard of, but this is one got reported today that ended up getting acquired. Jonathan says, at my current job in the startup, we exclusively use Figma for creating our projects. Yeah, Figma as a project management design tool / interface, it's like the standard now. In tech at least. So it's definitely worth, I would say, 10 to 20 billion, 15 to 20 billion. But Adobe could not pull that off. Speaking of Apple, they sent me a message today. They sent me this email. Let me pull this up, and then we'll talk about Palantir. They said, hey, Amit, you have a new limit on your Apple Card. We've extended your limit. I didn't even open the email, so I don't even know how much I think the limit was like 4,000 before. I don't know what the limit is now. And my comment was, hey, Apple, just because you extended my limit, I'm not buying your Vision Pro. I'm not going to, just because you give me like a couple $1,000 for a credit limit, I'm not going to be spending it on your Vision Pro because in about 9 months, you're about to release a new one that's hopefully better than the old one. Like, it makes no sense to even finance. Like, I'm financing this MacBook Pro, which I'm totally fine with because it's a couple $100 a month and I know I'm going to use this for like the next 4 or 5 years. If I finance a Vision Pro and then the next year they release the new Vision Pro, like financing it, you're going to feel so stupid paying every month for it if a new version is out. Especially because that's something you really do want to upgrade. You don't want to be holding onto a bulky thing on your head when they got a new slimmer version, right? So we'll see what's going to happen with the Vision Pro. But as of now, it does seem like generative AI is kind of the current thing that they are focused on. Okay, Palantir. Quick thing on Palantir, and then I want to talk about Bitcoin and what Michael Saylor's doing. So Financial Times put out a bit of a headline today. And on this headline, if you go into the article, they're basically saying, what did Palantir CEO just say about short sellers? And if you go deeper into the article, and I see a bunch of other people on Twitter kind of tweeting about this that are like essentially suits, these like people that are just like, they felt so uncomfortable that Karp talked about cocaine with short sellers. And I feel like it creates such a divide. It is the reason, guys, that we bought this sucker at $7 and the street has to buy it at $27. Because at $7, we liked when Karp was authentic and real, and he just said whatever the fuck he was thinking. Like lose my money, but don't lie to me. I think everyone here would not want to be lied to more than they actually want to protect their capital. And I mean that sincerely. Like, at the end of the day, being lied to and having an inauthentic kind of experience with a company, even if you make a buck here and there, you want to make money the right way and by putting your money into someone who's not going to bullshit you. And I think Karp, you can call him whatever you want. He's not a bullshitter, in my opinion. And so this Financial Times article and a bunch of other people on Twitter were basically saying that he shouldn't be talking about cocaine. It's unprofessional. And to me, my one sentence response is I think the eccentric response Karp gave and how spontaneous it felt is actually why people trust him. And because people trust him, that is why we're giving our capital to him. That's why we actually care about him. Someone had a good meme here. I know Garcia is talking about cocaine clown capitals in full force against Palantir. Someone else had a good meme. Let me see if I can pull it up. The cocaine thing is now it's an internal thing inside of the community right here. So this is what my boy Psych Pilot tweeted. Palantir short sellers right now. Like the cocaine has to be the fucking meme of the community now. Like it just has to be. This is great. It was such a good line. And it's the reason we love the guy. It's the reason why Jim Simmons, I know he's a mathematical guy, but I think there's a part of him who likes the quirkiness of Palantir, and that quirkiness translates into really hard, deep technical stuff, which is really cool. Last thing I'll say on Palantir, I was a little embarrassed today for what I said about Palantir. So this week has been pretty fun. We got a retweet from Tom Lee, which was awesome. That was great. Then we got a like by Michael Saylor, which was really cool because I've been binging a lot of his content. Today, Palmer Luckey responded to our tweet, the Anduril dude. And he basically said, you're wrong. So I said, Anduril was founded by all Palantir employees. I shared their new video. And Palmer's like, actually, I love that you guys are interested in us, but I am the founder and I never worked at Palantir. And at that moment, I was like, actually, you're fucking right, dude. I got that wrong, dude. Now, I think there's other C-suites that are part of Anduril that love that are from Palantir. But Palmer Luckey founded fucking Oculus. He wasn't at Palantir. So I did get that wrong. So I took that as an opportunity to say, you're right. I should have said much of the leadership comes from Palantir employees. By the way, can you please come on the channel and can I interview you? And then I attached a picture of all the other people. Look, the CFO went to Palantir. The co-founder and COO went to Palantir. The other co-founder and CEO went to Palantir. Trey Stevens, co-founder and executive chairman, went to Palantir. General counsel worked at Palantir. Chief revenue officer worked at Palantir. All these mother effers worked at Palantir, but not the actual founder, which is Palmer Luckey. So I took that as an opportunity to ask if I can fly out to California, interview him, and we'll see what he says. But yeah, we got Palmer to respond, but we were wrong when we got his attention. Let me play that video again for you guys one more time because that video was insane, and then I want to move on to some Bitcoin stuff. So this video was just insanity. This is their newest product that they put out today. Insane, dude. It's wild. It's an autonomous weapon. And it really works. Let me do the slow-mo here. Let me turn off the audio. So the slow-mo right here, the slow-mo we started in the morning, it was just crazy. So 75 minutes of endurance, and then 33 pounds of payload capacity. And then look at this thing. Look at that thing right there. Boom. It's just wild, dude. Absolutely wild. Crazy, crazy, crazy weapon. Anduril, again, a software, hardware company building all this stuff together. And this is what they're doing. So really cool stuff to see from Anduril. Garcia, you said you had a clip underneath this? Oh, retail investors. Yeah, let me in. Anduril DPOing. I think a lot of Palantir investors are definitely going to try to get into Anduril. So we cannot buy this yet. It's on the private markets. I don't even know any funds that are publicly traded. I think Kathy's VC fund might have some exposure to this thing, but I'm not sure. But no one can get there. My friend actually recently just got a job there. So one of my friends, one of my good friends, actually, he was texting me about it. It's crazy that he's actually there. He met with Palmer Luckey the other week. So it's a really, really cool startup. The question now is just when are they going to go public? And who knows, man? It might take 5-6 years for them to officially get public. Philip says, is that their consumer product? Oh my God. Oh my God. Dat Nugan says the hub is not available in Texas now. No way, dude. No way. There's no way that's true. Oh my. Yo, that's wild. The hub is not in Texas anymore. The hub is gone. This is breaking news, dude. That should have been the title of this damn market open or market close. The hub is now not in Texas. You can't access it anymore. Wow. I'm not going to Texas anytime soon. So there you go. Apparently there's this impinges on the rights of the adults to access protected speech. It fails strict scrutiny, blah, 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 blah. It's something about First Amendment rights, and it's an age verification system. Okay, so basically they're leaving because I think Texas is forcing them to verify your age. That's kind of the gist of it. Well, VPN use is about to skyrocket in Texas. Dude, the Google searches for VPN in Texas are about to skyrocket. They're about to skyrocket. Oh, Garcia says they're not allowed in Arkansas either. What? What type of communism is going on in Arkansas and Texas that doesn't allow you to freely access a regular website? That is wild. Now, 99% of the internet are websites similar to that. So it's not like, it's not like you're going to be in the most trouble looking for that type of content, but still, that's pretty communist to me. Pretty communist to me. Okay, let's talk about MicroStrategy. So I found this clip from 2021. It's a 3-minute clip. I really think it would help a lot of people understand. It helped me understand. Why is Michael Saylor collateralizing his company to buy Bitcoin, and how is he doing it? He talks about the first moment when he did it and what actually ended up happening. So here's 3 minutes on MicroStrategy, and he's doing another 500 million, which will be executed soon. And then we'll talk more about what's going on in the world of Bitcoin.
Through the Dutch auction. We had to do the Dutch auction to provide a graceful transition for our shareholders to get long Bitcoin, right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stock started moving up. And then we realized that the conservative thing to do is just stop there. And if we stopped there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. And Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like,
he wants a lot. And so this is kind of where he realized, wait a second, if I could borrow 1% but make 171%, I mean, my spread is 170% of my money, which is better than any other asset class that I can invest in.
Where are you going to stop that?
When you borrowed at the 75 basis points, I was impressed. But then you followed it up and you borrowed even more at a 0% interest rate, if I remember correctly. What was the second offering?
Because the first offering came out, the strike was 398. Bitcoin kept moving up. Our stock kept moving up. Eventually, that bond was the best performing bond of the entire year. Right, Anthony? What I'm saying is, of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. At some point it was trading insane amounts, like triple.
This is why the debt issuers are giving him money. I think people have to remember, when MicroStrategy is raising these hundreds of millions of dollars to buy Bitcoin, they're not lying to the debt issuers. They're saying, hey, if you give us 800 million, we will buy Bitcoin. And they're not lying to their shareholders. They're telling the shareholders, hey, if you buy our stock, you are basically buying the assets on our balance sheet, which is Bitcoin. We will buy more Bitcoin. So everyone's in agreement here, right? Michael Saylor's just being honest about it. And then Bitcoin's going up. And then everyone's like, well, I guess this thing works. Let's just keep doing it. And that's how he's kind of executing this.
Your money on a bond. Okay. So we had good success there. And of course, Bitcoin kept moving up and our stock kept moving up. And we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with 400 million. This time we started with 600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to 0. So we struck it at 0. And up 50, 37, I forget the number, but we ended up having a 50% premium or 47%. I forget exactly. It was a high premium. It was a low coupon. The strike price was $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it?
Yeah, right. Why wouldn't you do? I mean, that's kind of so. I think that clip was really illuminating to me because I kind of realized what he thought about in this kind of infinite money glitch. And when you go deeper into the podcast and listen to him talk about, where do you put your money? How do you protect yourself against the debasing of the currencies? And ultimately, where do you get a return that's reasonable? And how can you accelerate those returns? This seemed to be the only strategy you could engage in to like hyperscale if you believed in the thesis around Bitcoin and overall cryptocurrency assets. And that's what Saylor's doing. And so far it's working as long as Bitcoin continues. Now, Bitcoin right now, let's see after hours. We'll listen to the Adobe call in 18 minutes. So I'll have that ready to go. Adobe now down 10%, still down after hours. Where's Robinhood? Look at that. Robinhood up 1% after hours, like a champ, dude. Like a freaking champ. 1827. It took a beating today. It was at 1850 for like 4 hours. Then it got slammed to 1770. And I would have been happy with a 1790 close. I'd have been like, you know what? That's still up 2%. That's not bad. But it just said, nope, we're staying at 18. We're going back to 18. 1825 after hours, not bad. SoFi up about 1%, 711 right now on SoFi. Tesla 162.5. That's flat after hours. Apple's up a little bit. Palantir 2438. That's down a little bit. Celsius 93 was down 3% today. And NVIDIA down about 0.17% on the day as well. So there you go. That's a little bit of the price action we saw on some of these major companies. Let's get an update on NVIDIA. Wait, where's SMCI? Let me check these guys. SMCI also was down 5%. Yeah, NVIDIA falls, SMCI falls. Let's get an update on NVIDIA. Here's one analyst that basically says it's going to be very hard for NVIDIA to live up to these results that they're doing right now, and what his take is on, how hard it's going to be for NVIDIA to actually maintain these levels. The interesting thing about NVIDIA as well is that they do have a conference coming up on March 18th. So investors are really looking forward to that conference to see if there's any new product updates that they're rolling out. Here we go.
For rate-sensitive sectors, that would be technology, still outperforming the broader market. And within tech, it is still all about the Magnificent Seven. CNBC's index up another 16% this year as AI continues to fuel gains. NVIDIA, well, we cannot go. The over-under on mentioning NVIDIA is within, we've gone 13 minutes. I think that's a record for CNBC. Up 78%. Some firms believe that the run may not be over. Wedbush raising its price target for NVIDIA to $1,000 ahead of its AI conference next week. Meanwhile, Barclays writing in a note that big tech valuations reflect high-quality earnings growth, plus the scarcity of that growth elsewhere in the equity market. So multiples are extended, it says, relative to other U.S. equities, but they are nowhere near post-COVID highs, let alone the extremes of the dot-com bubble. That's a lot, Jake, to digest. Why don't you jump in here and speak to me specifically about technology, its priciness, and the Mag 7?
Yeah, I mean, let's begin with NVIDIA. Clearly, 2023 was a story about incredibly strong fundamentals, upwards revisions to earnings. And that is really a remarkable trend. This is a giant company who now consensus expects for them to double revenues from 50 billion to nearly 100 billion. And that's an incredibly high bar. And if they meet that, I think that's perfectly reflected in the price here. But the risk is really, that's a monstrous leap for a very large company. And they're swallowing up almost all of kind of the economic gains from the semiconductor sector and the kind of the AI boom. And so at some point, we think those gains are going to be more dispersed. So you're starting to see AMD get more chatter. They're coming to the market with a GPU. You're seeing kind of a broadening out, whether it's Intel, Dell, other beneficiaries. And so how much will an NVIDIA capture of that market share in the AI space going forward? And so those are just remarkably high standards to beat. And we think that's in the price. And if they do it, well, that's good on them, but it's a difficult thing to do.
I don't necessarily know if it's reflected in the price. He says if they beat those expectations, it's in the price. I don't know, dude. 35 PE, I think they could beat those expectations, and that's not reflected in the price, especially if no one else can pull up the numbers that NVIDIA is doing. So, obviously the traditional analyst take is that maybe this stuff is already baked in, but if they keep beating, what other company is going to beat at the same level? Maybe it's not baked in. Maybe there's a lot more cooking to be done for that price. Another update, speaking of NVIDIA, the largest position now in Meet Kevin's ETF is NVIDIA. So I actually misread this yesterday, or I posted it too soon. I told you guys he still had 36,000 shares of Tesla. I checked his ETF this morning. He sold everything. He's out of Tesla and he's out of Enphase, which was astonishing to me that he got rid of both of those positions because they were the largest positions in the fund. So if you invested in the PP fund for exposure to solar or to Tesla, FSD, whatever, that exposure is gone. And he'll probably get back in, but not yet. So NVIDIA and AMD are now the largest holdings. This fund is up 2%. It's crazy because the fund is up 2% for the year. NVIDIA is up like 80%. But obviously Tesla and Enphase took a massive dump. And so that's why the fund is not really performing. Palantir, he only has 60,000 shares compared to some of the other companies he has. It's a 3% of the portfolio. If Palantir was higher, like if he had dumped a lot of money at $18, he would be outperforming. But, the problem is it was more Tesla Enphase heavy. So PP down to AMD and NVIDIA now having the main position. Apple as well, 4% of the fund. The volume on Meet Kevin's PP ETF. Oh, wow. Robinhood doesn't show it. I thought they showed the volume. Okay, so I can't see the volume. I guess they don't show the volume for ETFs. But yeah, I mean, I don't know exactly how many people are buying it, but this one did shock me because I didn't expect it to be down as aggressively as it was. 35 PE is all based on future growth and long-term future growth, more importantly. Yeah, that's true. That's a good point. And if you argue that NVIDIA is a little bit more cyclical and their long-term future growth is not going to be there as high as it is right now, then I think that's a fair point. The thing is, if you guys remember the figure video that we saw yesterday, right? That figure video, that's powered on GPUs, right? These bots are powered on GPUs. And I know this is a random example, but if that type of industry scales, which we know it's going to scale, and we know there's going to be other industries like that, I don't know if NVIDIA's demand is necessarily going anywhere. Now, maybe they're not putting up triple-digit growth the same way they've done for the past 2 years, but they're still going to be putting up monster numbers. And as long as those monster numbers have higher operating margins, so that net income goes up, like EPS goes higher, even if top-line growth maybe slows down in terms of the rate of growth, I think the street's going to reward them. I think the street's going to reward them pretty well. William says 37,000 volume today on PP. Okay, so there you go. Does Webull show it? Because I checked Robinhood and it didn't show it. Oh, Webull shows it. Okay, so 37,000. So how much was ARK traded today? ARK was traded 17.82 million times. Wow, ARK is down 3% today. Now when SoFi dips, ARK dips because ARK has almost 10 million shares of SoFi. So SoFi is a bit of a proxy to determine what's happening with ARK. Michael Wilder says, every time you say PP, I die. I don't know what you want me to say, dude. That's what he named the fucking fund PP. So we got to call this shit PP now. Tesla down a little bit after hours. Where's our little Robinhood? Robinhood up 1.22%, continuing to be a champ after hours. S&P basically flat actually up a little bit after hours, 514.96. And Bitcoin back to almost 71. So Bitcoin took a tumble from 73, you see this right here, to 68,521. So it fell 5,000 points. Now making its way back up to 70,900. I think there's a lot of people waiting for these 68, 69 levels, including BlackRock and Fidelity. I think they have so many buy orders ready to go if it hits those levels because they know they're probably not getting super lower than that. And they don't want to be buying at 72, 73. They want to get the best pricing. And so that's why I think we see the rebound every time that it falls that low because there's just a ton of ETFs and general buyers ready to gobble up some Bitcoin if it continues to fall to those levels. So that's what we got right now in the world of the markets. Those were the main headlines. If anyone else has anything in the chat they would want to talk about, we got 10 minutes until we get to Adobe, and we'll listen to Adobe. I'm excited for that call. I've never heard these guys before. I hope it's exciting. I would say pretty much like 5% of the earnings calls we've listened to this cycle have been exciting. Palantir, probably the most exciting, I would say. Tesla was the most entertaining, if it was not the most exciting. Just hearing Elon basically get pissed off at everybody and the stock keeps falling and he doesn't care. And then what else was there? Google was an exciting call because it was seeing what's his name, Sundar Pichai basically not be able to explain why search won't die. Microsoft was probably a good one, but there weren't that many good. Meta was great. Amazon, Andy Jassy killed it. outside of that, most of these calls kind of sucked, quite frankly. Most of these calls were not the best. PayPal, oh good God, PayPal was horrible. Oh, speaking of PayPal, so thank you for saying that. I don't know if you guys knew this. I found this out today. Monish Prabhai, I just messed up his name so bad. Monish Prabhai, I think that's how you say it. Charlie Munger disciple now has 3.2% of his funds in PayPal. I didn't know that. I think this was disclosed today. This is the first time I saw this. Let me know in the chat if you knew this. I don't think this was disclosed before. But there you go. So we got a pretty big whale. Monish he's one of, I mean, people consider him a pretty legendary investor underneath Munger. He's in PayPal, which means it would be kind of funny if Buffett, the secret stock he's buying is actually PayPal. You know, maybe Prabhai and Buffett, I'm sure they're very close. They had dinner one night and it was like PayPal. He convinced them. Maybe it's PayPal. We know it's a financial and eventually it's got to get disclosed probably in the next month or two. If it's PayPal's going to the fucking moon, dude. When Buffett bought Apple, I think it jumped 10% the next day. And it's not easy to get Apple to go up 10%. So if Buffett is buying PayPal or accumulating PayPal, it is going to be very exciting. It's going to be very, very exciting. He did go hard on Baba at all-time highs. That was because of Munger. I don't think he wanted to. I think Munger was like leading the pack there. And I think they were buying at 300, at 250. They were buying. That's why Everything Money, their whole channel became about Alibaba because they were just blindly following Munger and Prabhai. They even interviewed Prabhai. I remember they had him on the channel. And yeah, Alibaba did not work out. It's so funny that like Alibaba is such a big value play, but the smartest people in the world didn't realize that China is a threat. Like, it's kind of crazy, right? The smartest investors in the world that were dumping hundreds of billions into Alibaba didn't for 1 second think, wait a minute, what if the CCP just like isn't happy with them? You know, it's like you would think like you don't have to be a rocket scientist to kind of come to the conclusion that that is a bit of a threat to an investment and we should, take it seriously. But no, they just kept piling in. Michael says, do you have any reasons why SoFi dipped so much since Kathy Wood bought over 726,000 shares? It doesn't matter if Kathy's buying, if someone else is selling. So Kathy, forget 726,000, dude. She's at almost 10.2 million shares, but she's buying from people that are selling. The reason I think it's being sold off is because there's not a catalyst in the future, at least for the next, I would say 6 to 8 months. Profitability is fine, but it's not amazing. Their profitability is going to get better because they're raising debt, but that debt kind of feels like they're going to dilute shareholders a lot. And that's actually not going to happen, but the perception is that's the case. And it's not like they're taking the debt and they're buying Bitcoin. They're taking the debt and they're, paying off their other interest debt. Like it's just not an exciting reason to pay debt or to raise debt for like MicroStrategy. MicroStrategy is raising debt so they can buy some freaking Bitcoin, right? So it's a totally different way the market's perceiving it. And then on top of that, dude, the app is just not good. And I feel like me and Chris have been pretty vocal about this for a while, and also Carlos and Vitali. And we've been saying this since the SoFi Weekly podcast ever started. Like, this app is not a good app, and I don't know. Someone on Twitter yesterday was pretty frustrated and tagged Anthony Noto and said, "Yo, why does this app why does it take forever to load?" And I think user experience matters. In November 2022, I remember saying like, "Yo, why would people put their money in SoFi if it doesn't even load?" So Tanner on Finance Junkies last night, he was like, "Oh, Robinhood got 100,000 members last month. SoFi got 645,000." I was like, in my head, I didn't say this because we didn't have time, but in my head, I was just like, dude, you got a bunch of members that got loans. They're not actually putting money into Robinhood. SoFi had $2.9 billion in deposits last quarter. Robinhood had $3.5 billion last month. It's not like all those members are dumping their money into SoFi. Why would they do it? To either invest it or to get an APY. To do any of those things, you have to love the product to put money. If I want to put $100 into Robinhood right now, it takes literally 2 seconds and boom, it's there. The same experience is not the same with SoFi. So you're not going to increase deposits. You're not going to get people to be excited. You added 645,000 members, the majority of them taking loans, which are more high margin than Robinhood's business. I get it. But in terms of a financial ecosystem that SoFi is trying to build, that's not really happening if those people aren't using the product as much. And so again, I think SoFi is a totally different business. I don't even think it's comparable to Robinhood. Robinhood is a brokerage platform that's allowing you to retire and stuff. SoFi is a lending company. It's a bank at the end of the day with a tech side to the platform that's not really growing aggressively enough for shareholders to get excited. So that's why it's selling off. It's selling off because not enough people are excited right now about SoFi. And even if Cathie Woods is buying, people are selling. John says it's built by devs, not a design team. Let devs create the app. You are not going to have a good user experience. Yeah, I agree. Robinhood, dude, their focus on product is just a different level. This credit card that's going to roll out, it's just going to be a different level in the context of, product focus. And SoFi doesn't really have that product focus. Adobe call starts in 4 minutes, guys. I have it loaded up. So right when they go live, we will be here to listen to Adobe. Let me know in the chat who owns Adobe. Who actually owns Adobe? Let me know if you own Adobe. I do not own Adobe. But let me know if anyone actually has any money on this one. Okay, let me put this here. So yeah, so this will start in like 3 minutes, and we'll reload it, and we'll be good. Why were you all over SoFi and not just Hood? Well, if you listen to those original SoFi weekly podcasts, I kind of was all over Hood, right? That's what created a lot of debates on the podcast, because every time we would get on the podcast, like, look, I like SoFi as a business, but my position in SoFi is not even comparable to my position in Robinhood, right? And I've been pretty honest about that. I mean, you saw me fucking sell my options on the earnings pop. I didn't hold through it. Like I haven't touched a single share of Robinhood or a single option of Robinhood so far. I've been swinging it back and forth just because ultimately my bullishness has gone away. Ultimately, I left the SoFi weekly podcast because there's not that much to talk about. And I told the guys back in October, I was like, guys, this is like, I'm already doing a lot of other content, and every Friday there's nothing to talk about. So like, I'm already busy with finance. There's just so much other stuff to do. So you guys don't need me, right? I'm sure, because I tried to make the podcast funny, because there was nothing funny about the podcast. There was not a lot of personality, because the news was boring on SoFi. It is what it is, right? Everyone knows that. So when I realized there's no news and I'm super busy, I just couldn't commit to it. That's when I left. But on those podcasts, I was fighting with Tanner about Robinhood, because I was like, dude, I think user experience is a moat. And he was like, it's not a moat. And I get where he's coming from, because technically it's not a moat. But when you boil it down to like product usage and adaption, it does become a moat in certain situations. Like I think for Spotify, it is kind of a moat, even though there's Apple Music and YouTube Music and all that stuff. Like Spotify doesn't have the best moat because the record labels, but I do think their product, it keeps almost 500 million people using this shit. It's better than every other music app in terms of the user interface and design. It's just music is a sucky business. That's why they can't monetize the users. But I do think as a moat, it is important to kind of think about like that, to think of it in the context of a moat with user experience. Bitcoin selling off, does that hurt Robinhood? Yes, it does. It absolutely does. That means there's going to be less crypto transaction volumes on Robinhood. But again, the halving event, I think we'll get dips here and there. The halving event is what you need to care about in the context of Bitcoin in general, because when that happens, it creates more volatility, and Robinhood being, one of the 5-6 brokerages on the planet that can capitalize on that to offer Bitcoin. Why is it making me log in again? I just logged in on this. Okay, let me log in again. I just logged in on this one. Oh wait, no, this is March 26th. I'm on the wrong one. Hold on. Where am I? Watch webcast. Okay, here's the right one. Okay, here's the right one. Okay, here we go. Apparently they're having an event on March 6th, March 26th. Okay, I'm in. It'll be starting in a second. Now granted, I still love SoFi. I love the SoFi weekly guys, Tanner and me. That's my boy, right? I talk to him all the time. We talk privately. Like there's nothing like that. It's just that he knew, like, ultimately I got really busy, and I just didn't care that much about SoFi. All right, here we go. The call is starting.
Fácil de traducir y doblar videos. Wait, what? Oh, cette traduction est générée par l'IA. I'm working on this with my team, the speech AI team at Adobe Research.
Hi. Can we take a sneak into what that means?
Sure. With the technology, you can upload your video and have it dubbed and translate into various languages. It will match your voice, and it will generate new lip motions to match those languages. Wait. Es ist ganz einfach. Wir freuen uns sehr darüber. Siamo così entusiasti di questo. È fácil, estamos muito animados com isso. Estamos muy entusiasmados con esto. Nous sommes très enthousiastes à ce sujet. We're so excited about this. Keep an ear out.
I feel like that was an ad. I thought there was actually starting their thing, and that was just an ad. So yeah, that was not that was not the most exciting, but they should be starting soon. All right, here we go.
Good day and welcome to the Q1 FY 2024 Adobe Earnings Conference Call. Today's conference is being recorded. At this time, I would like to turn the conference over to Jonathan Vaas, Vice President of Investor Relations. Please go ahead.
Good afternoon, and thank you for joining us. With me on the call today are Shantanu Narayan, Adobe's Chair and CEO, David Wadhwani, President of Digital Media, Anil Chakravarthy, President of Digital Experience, and Dan Dern, Executive Vice President and CFO. On this call, which is being recorded, we will discuss Adobe's first quarter fiscal year 2024 financial results. You can find our press release as well as PDFs of our prepared remarks and financial results on Adobe's Investor Relations website. The information discussed on this call, including our financial targets and product plans, is as of today, March 14th, and contains forward-looking statements that involve risk, uncertainty, and assumptions. Actual results may differ materially from those set forth in these statements. For more information on those risks, please review today's earnings release and Adobe's SEC filings. On this call, we will discuss GAAP and non-GAAP financial measures. Our reported results include GAAP growth rates as well as constant currency rates. During this presentation, Adobe's executives will refer to constant currency growth rates unless otherwise stated. Non-GAAP reconciliations are available in our earnings release and on Adobe's Investor Relations website. Adobe Summit is just around the corner in Las Vegas at the Venetian Convention and Expo Center, beginning on Tuesday, March 26th. Following the day one keynote, we will host an investor meeting at 2 p.m. Pacific time. The event will be webcast live, and the replay will be available on Adobe's IR website. More details about Summit are available at summit.adobe.com. I will now turn the call over to Shantanu.
Thanks, Jonathan. Good afternoon, and thank you for joining us. Adobe had a strong first quarter. We achieved $5.18 billion in revenue in Q1, representing 12% year-over-year growth. GAAP earnings per share for the quarter was $1.36, and non-GAAP earnings per share was $4.48, representing 18% year-over-year growth. Our performance reflects the essential role that Adobe products play in driving the global digital economy. We're delivering on our strategy to unleash creativity for all, accelerate document productivity, and power digital businesses. Adobe Creative Cloud, Document Cloud, and Experience Cloud are more critical than ever to the success of creators, communicators, students, entrepreneurs, and businesses of all sizes, with AI serving as an accelerant for all. We're a leader in delivering generative AI across all our clouds. We're taking a highly differentiated approach across data, models, and interfaces. Our proprietary data is built on decades of deep domain expertise across creative, documents, and customer experience management. We leverage large language models, as well as have invested in building and delivering our proprietary models in the creative, document, and marketing domains. Our IP-friendly approach is a differentiator for creators and enterprises. In addition, we've innovated by delivering generative AI directly in products, with releases in Adobe Photoshop, Illustrator, and Express across both desktop and mobile. AI Assistant in Acrobat and Reader unlocks the tremendous value of the trillions of PDFs around the world. We're bringing generative AI to Adobe Experience Cloud, and we'll demonstrate our AI Assistant for customer experience management at Adobe Summit. Every student, communicator, creative professional, and marketer is now focused on leveraging generative AI to imagine, ideate, create, and deliver content and applications across a plethora of channels. Adobe is uniquely positioned through the combination of Express, Firefly, Creative Cloud, Acrobat, and Experience Cloud to deliver on this immense market opportunity. The success we're already seeing with our Gen Studio offering in the enterprise is validation of our leadership, and we expect that success to translate into other segments as we roll out these solutions throughout the year. We're driving strong usage, value, and demand for our AI solutions across all customer segments. We're successfully monetizing our innovations with particular strength in Q1 in the enterprise segment across our digital media and digital experience businesses. This strength is reflected in our strong RPO growth of 16% year over year. We're pleased with a strong Q1,
We have a phenomenal product roadmap that we're executing against to bring AI innovation across our global customer base, and we are just getting started. I'll now turn it over to David to discuss the momentum in our digital media business.
Thanks, Shantanu. Hello, everyone. In Q1, we achieved net new digital media ARR of $432 million and revenue of $3.82 billion, which grew 13% year over year. The world's information, whether it's an enterprise legal contract, a small business invoice, or a personal school form, lives in trillions of PDFs. We were thrilled to announce Acrobat AI Assistant, a massive leap forward on our journey to bring intelligence to PDFs. With AI Assistant, we're combining the power of generative AI with our unique understanding of the PDF file format to transform the way people interact with and instantly extract additional value from their most important documents. Enabled by a proprietary attribution engine, AI Assistant is deeply integrated into Reader and Acrobat workflows. It instantly generates summaries and insights from long documents, answers questions through a conversational interface, and provides an on-ramp for generating emails, reports, and presentations. AI Assistant is governed by secure data protocols so that customers can use the capabilities with confidence. We're pleased with the initial response to the English language beta and look forward to usage ramping across our customer base as we release other languages later in the year. We will monetize this functionality through a monthly add-on offering to the hundreds of millions of Reader users, as well as the Acrobat install base across individuals, teams, and enterprises. In Q1, we achieved Document Cloud revenue of $750 million, growing 18% year over year. We added $143 million of net new Document Cloud ARR, which was a Q1 record, with year-over-year ending ARR growth of 23% in constant currency. Other business highlights include Acrobat Web continues to be an incredible source of customer acquisition, with monthly active users up over 70% year over year and surpassing 100 million users in Q1. Acrobat extensions for Microsoft Edge and Google Chrome and our Acrobat mobile offerings continue to accelerate free-to-paid conversion. Increased viral adoption through link sharing and stakeholder collaboration drove over 300% year-over-year growth in the number of PDF files sent. Key enterprise customer wins include Berkshire Hathaway, Merck Sharp and Dome, Northrop Grumman, Porsche, and the U.S. Navy. On Creative Cloud, creativity is the currency of differentiation in our digital-first world. Every creator and business is focused on building their brand and engaging with their audiences through standout content. Creative Cloud remains the solution of choice for the world's creators, whether their medium is design, photography, video, illustration, or 3D. Adobe Express is inspiring millions of users of all skill levels to design more quickly and easily than ever before. In the year since we announced and released Adobe Firefly, our creative generative AI models, we have aggressively integrated this functionality into both our Creative Cloud flagship applications and more recently, Adobe Express, delighting millions of users who have generated over 6.5 billion assets to date. In addition to creating proprietary foundation models, Firefly includes a web-based interface for ideation and rapid prototyping, which has seen tremendous adoption. We also recently introduced Firefly Services, an AI platform which enables every enterprise to embed and extend our technology into their creative production and marketing workflows. Firefly Services is currently powered by our commercially safe models and includes the ability for enterprises to create their own custom models by providing their proprietary data sets, as well as to embed this functionality through APIs into their email, media placement, social, and web creation process. Early adopters like IBM are putting Firefly at the center of their content creation processes. IBM used Adobe Firefly to generate 200 campaign assets and over 1,000 marketing variations in moments rather than months. The campaign drove 26x higher engagement than its benchmark and reached more key audiences. In Q1, we achieved $3.07 billion in revenue, which grew 12% year over year. Net new Creative Cloud ARR was $289 million. Other business highlights include the launch of the new Adobe Express mobile app beta brings the magic of Adobe Firefly AI models directly into mobile workflows. The first of its kind integration with TikTok's Creative Assistant makes the creation and optimization of social media content quicker, easier, and more effective than ever before. Express web usage continues to ramp nicely, with total exports more than doubling year over year, and overall Express adoption is expected to accelerate even further given the positive reception we're seeing from the mobile beta. Generative Fill in Photoshop continues to empower creators to create in new ways and accelerate image editing workflows. Q1 saw the highest adoption of Firefly-powered tools in Photoshop since the release of Generative Fill in May 2023, with customers adopting these features across desktop, web, and most recently iPad, which added Generative Fill and Generative Expand in December. The beta release of AI-powered enhanced speech and new audio workflows drove Premiere beta usage to record highs. Adobe video tools were the go-to choice at Sundance Film Festival, with over 80% of this year's entrants using Adobe software. The introduction of Behance Pro, a new offering to serve the rapidly growing Behance community, empowers members to build their brand and find opportunities, and for businesses to hire talented creators through the Behance platform. The unveiling of new research, like the preview of our music generation models and editing tools last month, and our video auto-dubbing models earlier today, have inspired our Creative Cloud and Express customers. The introduction of Firefly services for enterprises drove notable wins in the quarter, including Accenture, IPG, and Starbucks. Other key enterprise wins include ACOM, Capital Group, Dentsu, IBM, Nintendo, and R.R. Donnelley. Given the size of opportunity we see with generative AI, we continue to focus on driving innovation, adoption, and usage of our AI solutions. In Q1, we saw strength across both clouds, with record new commercial subscriptions in Creative Cloud for Q1 and strong product-led growth in Document Cloud. You can expect to see the product advances in Express with Firefly on mobile, Firefly services, and AI Assistant in Acrobat drive ARR acceleration in the second half of the year. We're excited about our product roadmap. The 6.5 billion assets generated to date include images, vectors, designs, and text effects, and we can't wait to share the work we're doing on audio, video, and 3D through research sneaks and product announcements in the coming months. I'll now pass it to Anil.
Thanks, David. Hello, everyone. The Experience Cloud business had a great first quarter, achieving $1.29 billion in revenue, and was our strongest Q1 on record for new business. Subscription revenue was $1.16 billion, representing 12% year-over-year growth. Companies are prioritizing digital investments to improve marketing agility and customer engagement while driving growth and profitability. Adobe's holiday shopping report, which analyzes trillions of data points, showed strong online spending during the 2023 holiday season, growing 4.9% year-over-year to $222.1 billion, a new record for e-commerce as well as mobile shopping, which surpassed desktop for the first time and drove 51.1% of online sales. Our Adobe Experience Cloud applications span the entire customer funnel, from acquisition to monetization to retention. As the global leader in the digital experience platforms category, Adobe offers businesses a single view of their customers' data across every channel, allowing them to create precise segments and deliver personalized experiences, regardless of when and where a customer interacts with their brand. Over the last 5 years, our organic innovations in Adobe Experience Platform, Real-Time CDP, Journey Optimizer, and Customer Journey Analytics have made us the leading platform for customer experience management, given the scale of the profiles, campaigns, and interactions we process. 500 trillion segment evaluations per month. Today, rollout of personalization at scale has been limited by the number of content variations you can create and the number of journeys you can deploy. We believe harnessing generative AI will be the next accelerant, with Creative Cloud, Firefly Services, and GenStudio providing a comprehensive solution for the content supply chain, and generative experience model automating the creation of personalized journeys. Adobe Gen Studio is a generative AI-first application that allows marketers to quickly plan, create, store, deliver, and measure marketing content in a single intuitive offering. With state-of-the-art generative AI powered by Firefly services, marketers can create on-brand content with unprecedented scale and agility to deliver personalized experiences. Adobe Gen Studio natively integrates with multiple Adobe applications across Creative Cloud and Experience Cloud, including Express, Firefly, Workfront, Experience Manager, Customer Journey Analytics, and Journey Optimizer. It can be used by brands and their agency partners to unlock new levels of creativity and efficiency in marketing campaigns. Business highlights include momentum with Adobe Experience Platform and native applications, with the combined annualized book of business surpassing $800 million in the quarter. Demand for Adobe Experience Manager, Workfront, and Gen Studio to address the enterprise content supply chain. Global agencies, including Accenture Song, Avast, IPG, Omnicom, and Publicis, have standardized on Adobe as their technology platform of choice for their own workflows and to optimize creative collaboration with the world's leading brands. Strength in Adobe Journey Optimizer and Adobe Campaign as companies look to deliver more personalized experiences across channels and surfaces. Adobe was recognized as a leader in the Gartner Magic Quadrant for Digital Experience Platforms for the 7th consecutive year, as well as the Forrester Wave for Digital Experience Platforms. Adobe Experience Manager Assets was also named a leader for the 4th consecutive time in the Forrester Wave for Digital Asset Management. Key customer wins include Carl Zeiss, Comcast, Home Depot, NASCAR, Nestle, PayPal, Rogers Communications, Santander Group, Starbucks, and Walgreens. Later this month, we are excited to host Adobe Summit, the world's largest digital experience conference in Las Vegas, where we'll be joined by thousands of customers, partners, and developers from around the world. We look forward to showcasing a number of product innovations, including a new generative experience model, advances in Adobe Gen Studio, a new AI assistant in Adobe Experience Platform, new capabilities in RTCDP for first-party data activation, and expanded Firefly services offerings. We will articulate our vision and playbook for brands to achieve a new level of personalization at scale in the era of generative AI. We look forward to sharing our exciting product roadmap and hearing from our customers on how Adobe is helping them transform their business. We were off to a fast start in Q1 and look forward to continuing the momentum and leadership in Q2 and beyond. I will now pass it to Dan.
Thanks, Anil. Today, I'll start by summarizing Adobe's performance in Q1 fiscal 2024, highlighting growth drivers across our businesses, and I'll finish with financial targets. In Q1, Adobe delivered another quarter of double-digit top-line growth with robust margins that result from product leadership, strong execution, and financial discipline. The pace of our product innovation across Document Cloud, Creative Cloud, and Experience Cloud is leading to customers making large multi-year commitments to Adobe. And you see the result of those customer investments in our RPO performance, which accelerated to 16% year-over-year growth. In the quarter, Adobe achieved record revenue of $5.18 billion, which represents 11% year-over-year growth, or 12% in constant currency. Business and financial highlights included GAAP diluted earnings per share of $1.36 and non-GAAP diluted earnings per share of $4.48. Digital media revenue of $3.82 billion. Net new digital media ARR of $432 million. Digital experience revenue of $1.29 billion. Cash flows from operations of $1.17 billion. RPO of $17.58 billion exiting the quarter, and repurchasing approximately 3.1 million shares of our stock during the quarter. GAAP EPS came in lower due to the billion-dollar payment resulting from the termination of the Figma transaction. Absent the termination payment, our cash flows from operations would have been $1 billion more, and GAAP EPS would have been $2.19 higher. The termination payment impacts both Q1 GAAP EPS and our full year fiscal 2024 GAAP EPS. In our digital media segment, we achieved Q1 revenue of $3.82 billion, which represents 12% year-over-year growth, or 13% in constant currency. We exited the quarter with $15.76 billion of digital media ARR, up 14% year over year in constant currency. Adobe achieved Document Cloud revenue of $750 million, which represents 18% year over year growth as reported and in constant currency. We added $143 million of net new Document Cloud ARR in the quarter. Q1 Document Cloud growth drivers included demand for Acrobat subscriptions across all customer segments and geographies, continued growth of Acrobat Web, demonstrating the success of our flagship products across multiple surfaces, growing monthly active users in our Acrobat Reader funnel, driving free to paid conversion, new user acquisition resulting from our Microsoft Edge and Google Chrome partnerships, strengthen our Teams business with upselling our new Acrobat offering, which includes integrated sign capabilities, and strong demand from businesses of all sizes, demonstrating the mission criticality of our document solutions. We achieved creative revenue of $3.07 billion, which represents 11% year-over-year growth, or 12% in constant currency. We added $289 million of net new creative ARR in the quarter, with ending ARR growing 12% year-over-year in constant currency. Overall, CC pricing actions performed as expected in the quarter. Q1 net new creative ARR grew more than 20% year-over-year, excluding the impact of pricing actions associated with both Acrobat CC and all apps in the year-ago quarter, and Creative Cloud in Q1 FY24. Q1 creative growth drivers included new subscription growth, including strong adoption of Creative Cloud all apps across geographies and customer segments, strong single app customer demand in creative categories such as imaging and photography, and continued growth of Stock and Frame.io. We again saw strength in emerging markets, which we continue to believe is a massive growth opportunity, and outstanding performance of Creative Cloud in the enterprise, including early traction of Firefly services. Turning to our digital experience segment, in Q1 we achieved revenue of $1.29 billion, which represents 10% year-over-year growth as reported and in constant currency. Digital experience subscription revenue is $1.16 billion, growing 12% year-over-year as reported and in constant currency. Q1 was a tremendous start to the year for our Experience Cloud business, with growth drivers including success closing transformational deals across geographies and verticals with large enterprises that are choosing Adobe to be their end-to-end customer experience management platform. Continued momentum with AEP and native applications, with the annualized book of business growing more than 60% year-over-year. Strong customer adoption of our content, campaign, and Workfront solutions, and continued strength with customer retention and expansion across our products. Customer experience management remains an enterprise imperative, and as a leader in the category, we see a robust pipeline as we look into Q2 and beyond. Turning to the income statement and balance sheet, Adobe's effective tax rate in Q1 was 36% on a GAAP basis and 18.5% on a non-GAAP basis. The Q1 GAAP tax rate came in higher than targeted due to the Figma termination payment. RPO exiting the quarter was a record $17.58 billion, growing 16% year-over-year as reported and in constant currency. Our ending cash and short-term investment position exiting Q1 was $6.82 billion, and cash flows from operations in the quarter were $1.17 billion. In Q1, we entered into a $2 billion share repurchase agreement, which effectively exhausted our prior $15 billion authority. As a result of our strong trajectory of growth and profitability, we are announcing a new $25 billion share repurchase program, which demonstrates Adobe's continued commitment to returning capital to our shareholders. In light of the momentum across our business and factoring in the macroeconomic environment, for Q2, we're targeting total Adobe revenue of $5.25 to $5.30 billion, digital media net new ARR of approximately $440 million, digital media segment revenue of $3.87 to $3.90 billion. Digital Experience segment revenue of $1.31 to $1.33 billion. Digital Experience subscription revenue of $1.165 to $1.185 billion. Tax rate of approximately 18.5% on a GAAP and non-GAAP basis. GAAP earnings per share of $3.35 to $3.40, and non-GAAP earnings per share of $4.35 to $4.40. In summary, fiscal 2024 is off to a strong start. By combining the power of product innovation and executional excellence, Adobe is driving consistent, profitable growth. We're delivering on our product roadmap, and we have the right strategy to monetize these innovations into the back half of the year and beyond. Adobe is incredibly well positioned to capitalize on the secular trends that will shape the next decade. Shantanu, back to you.
Thanks, Dan. We're the leader in 3 large and growing categories and have delivered groundbreaking innovation across Creative Cloud, Document Cloud, and Experience Cloud. We believe that AI augments human ingenuity and expands our addressable market opportunity. I'm proud of the pace and the responsible manner in which we have embraced and delivered generative AI capabilities across our product portfolio. As a result of our strategy and execution, we're confident in our ability to attract new users and deliver value to existing customers to drive growth and profitability. I'd like to thank our 30,000 employees for their continued dedication and unwavering focus on innovation and execution. It is particularly exciting to be named to Glassdoor's Best Places to Work, Fortune's Most Admired Companies, and the Just 100. Thank you, and we will now take questions.
All right.
Operator?
Finally got some good stuff. Here we go. Let's see what we got.
Thank you. If you are dialed in via the telephone and would like to ask a question, please signal by pressing *1 on your telephone keypad. If you are using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Again, please press *1 to ask a question. Please limit yourself to one question to ensure that everyone has the opportunity. Then you may press *1 to rejoin the queue. Our first question comes from the line of Kirk Materne with Evercore ISI. Go ahead.
Yeah, thanks. Oh, thanks very much for taking the question. I guess maybe this is for David or Dan. You know, obviously you guys called out that new creative ARR was up 120% year over year when you exclude the pricing increases, which infers a pretty major pricing headwind that we're seeing right now. Can you all just try to parse out how that's going to play out over the year? I know, David, you mentioned, ARR will go up in the back half of the year, but that, it's just tough, I think, to reconcile what's going on in the business, on a normalized basis and when we might see that sort of translate more into the metrics that everybody follows. Thanks.
Yeah, I'll start and others can go ahead and add on. First of all, we do, as we look at the book of the business, it is a strong start to the year with Q1 coming in at a high watermark with 432 across the entire business. As we look specifically at Creative Cloud, I just want to sort of make sure everyone takes a step back and looks at our strategy to accelerate the business, because I think the growth drivers here are very clear. We are focused on expanding access to users with things like Express on mobile. We want to introduce new offers across the business with things like AI Assistant and also existing capabilities for Firefly coming into our core Firefly, our core Photoshop and Illustrator and flagship applications. We want to access new budget pools with the introduction of Firefly Services and Gen Studio, as we talked about. And the early signs, as you point out, in Q1 results are really suggesting that those growth drivers are taking hold. As you talked about normalizing for FY23, FY24 pricing actions, we grew the CC business about 20% year over year. Other key things to look at is that we set another record for new commercial subscriptions in Q1, and the business
growth remains stable if you look back at revenue, 12%. If you look forward at ARR, 12%. So the stability and the diversity of the business is strong. And as we enter the back half of the year, we have capabilities for Creative Cloud pricing with Firefly that have already started rolling out late last year, as we talked about, and will be incrementally rolling out throughout the year. We're ramping Firefly services and Express and Enterprise. As we talked about, we saw a very good beginning of that rollout toward the end of Q1. We also expect to see the second half ramping with Express Mobile and AI Assistant coming through. So we have a lot of the back-end capabilities set up so that we can start monetizing these new features, which are still largely in beta, starting in Q3 and beyond. And as it relates to pricing, it's what we've talked about in the past. We had two pretty significant pricing actions that benefited FY23, the first one being the Acrobat price increases that we had put out with the new value that we had introduced with sign capabilities, and also a CC price increase that we introduced in FY22 that was rolling into FY23. Both of those are rolling off as we have now introduced the new pricing for CC with Firefly. Overall, the roll-off of the prior pricing is more significant than the new pricing that we've introduced. Thanks.
And we will take our next question from Brent Thill with Jefferies. Please go ahead.
Thanks, Shantanu. The magnitude of the beat this quarter was roughly half the absolute beat you've had in past quarters, and then the guide obviously lower for next quarter. I think everyone's asking, is this some type of AI headwind? Is this macro? Is this execution? Can you just comment on, and maybe it's none of these things, but can you just comment on what you think you're seeing in the current quarter?
Yeah, happy to, Brent. And again, I'll reiterate that, as it relates to us taking our targets pretty seriously. I mean, when we guided to 1.9 billion for the year, I mean, we had factored in both, as David mentioned, what was likely to happen in the pricing and how that rolls off, as well as the product roadmap. And, when AI Assistant and Acrobat would be available, when, Express, which is now in beta, would be available. So I think it factored in all of those. I mean, I guess if you are looking at it from accomplishment, we look at it and say, hey, we did 410, I think last year we did 432. If you look at the guide, and we're on track as it relates to the 1.9 and to hopefully exceed that guide. And so from our perspective, it's playing out. Maybe the other color, Brent, that I would provide is, given the desktop products are still in beta, and there we look at value and there we look at utilization. And so I think we gave you some numbers on the 6.5 billion generations that we're seeing, the really positive feedback that we're getting in Acrobat that continue to give us optimism associated with how that is. I think where there's tremendous interest, and where if you look at it from a AI monetization, the two places that we're monetizing extremely in line with our expectations. The first is as it relates to the Creative Cloud pricing that we've rolled out. And as you know, the generative packs are included for the most part in how people now buy Creative Cloud. That's rolling out as expected. And the second place where we are monetizing it is in the entire enterprise as it relates to content and Gen Studio. And I'm really happy about how that's monetizing it. And that's a combination, Brent, of when we go into an enterprise for creation, whether we provide Creative Cloud or a combination of Express, what we are doing with asset management and AEM workflow, as well as Firefly services to enable people to do custom models as well as APIs. We're seeing way more monetization earlier, but again, very much in line with expected. So I look at the quarter and I feel really good both about the product delivery as well as the way monetization's turning out. I mean, it's clear, I guess, a little bit from, what we've seen, that expectations were perhaps a little higher, both in terms of, what we would guide for Q2. But, I'm really optimistic about what we have done.
Thanks, Shantanu.
Our next question comes from the line of Brad Zelnick with Deutsche Bank.
Great. Thanks so much for taking my question. My question is for Dan. You're not raising the full year guide, and I appreciate it's still early in the year, but I think we're all hoping you can at least affirm it for us. But you pushed out the enforcement of generative credit limits for some products beyond April that were originally expected sooner. What's the thinking behind this decision, and what are you seeing thus far in terms of credit consumption and purchasing patterns of those credit packs? Thanks.
Yeah, thanks, Brad. I'll jump in on the first part, then toss it over to David for the second. So we're not updating the targets. What the targets we provided for the full year, they're as of the December call. What we did share on the call was the material change that we saw in Q1 as a result of the Figma termination payment. We talked about the GAAP EPS impact. It rolls through Q1 and it'll certainly have an effect for the full year. And it's $2.19 as a result of the $1 billion payment. And I think with that, I think you have everything you need relative to where we set our targets, but we're not going to be updating them on this call.
Yeah, and I'm happy to add a little bit. Yeah, in terms of the timing of when we start enforcing credits, don't read anything into that other than, right now we are still very much in an acquisition mode. We want to bring a lot of users in. We want to get them using the products as much as possible. We want them coming back and using it. One thing I do want to state, because I know there's a lot of energy around how do these credits play out over time. In the last few weeks, we've done a couple of sneaks that could also be instructive. Last month, we snuck a music composition where you can take any music track, you can give it a music type like hip hop or orchestral or whatever, and it will transform that initial track into this new type of music. Just this morning, we snuck our ability to do auto dubbing and lip syncing, where you give it a video of someone talking and saying English, and then you can translate it automatically to French or Spanish or Portuguese or whatever. As you can imagine, those actions will not take one credit. Those actions will be much more significant in terms of what they cost. So right now, Alex, the primary point is about proliferation and usage. We're going to be bringing in a lot more new capabilities throughout the tools that will drive more usage, and we're going to be bringing in more expensive capabilities as well. And as we've talked about, you should start to see that ramp through the year, and we feel very comfortable with the adoption we're seeing. Just one last thing to call out, as we mentioned on the call, highest number of users using generative AI in Q1 ever. So we're very excited about the trajectory.
And maybe just to add a little bit more of how we're thinking about it as it relates to the monetization of AI. I think we're in early stages as it relates to experimentation. So we're looking at both, what the value utilization is as well as experimentation. The value utilization is actually really positive for us. I think as it relates to the monetization and the experimentation, we have the generative packs, as you know, in Creative Cloud. I think you will see us more and more have that as part of the normal pricing and look at pricing, because that's the way in which we want to continue to see people use it. I think in Acrobat, as you've seen, we are not actually using the generative packs. We're going to be using more of an AI assistant model, which is a monthly model. As it relates to the enterprise, we have both the ability to do custom models, which depends on how much content that they're creating, as well as an API and metering. And we've rolled that out and we've started to sell that as part of our Gen Studio solution. So I think it's fair to say, and I certainly monitor what everybody else in the industry is saying. The good news about this is the interface integration that we've done in all our apps and the utilization. And I think, the experimentation will enable us to determine how we best attract the largest number of customers that we can who are new to Creative Cloud. We've talked about that as it relates to Firefly attracting, new customers. Certainly, I think the number of Q1 commercial subscriptions was another record. So we're absolutely doing everything that we intended to experiment as we roll these out, Brad. So I wanted to accentuate that as well.
Thank you so much. Very helpful.
Your next question comes from the line of Michael Turrin with Wells Fargo Securities. Please go ahead.
Hey, great. Thanks. Appreciate you taking the question. David, couldn't help but notice you led off your prepared remarks section with the Document Cloud. Can you speak to the enthusiasm you're seeing on the document side? And when we think about the mix of digital media growth for the year, should we expect it will continue to trend towards that document side, or is it more the second half where some of the creative enhancements start to layer on more meaningfully? We could start to see that shift back a bit. Thanks.
Yeah, happy to talk about that. We were very and continue to be very happy with the performance of Document Cloud. You know, if you really look at trying to understand sort of how that plays out, Document Cloud the growth is a combination of both our go-to-market efforts and our product innovation. On the go-to-market effort side, think about the fact that, you know, Reader continues to be a top of funnel for us, and we continue to see Reader monthly active user growth. So the potential of people we can convert over to paid subscribers continues to grow. We also talked about the fact that Acrobat Web has been a major contributor to our growth. So we're seeing 70% year-over-year growth in terms of Web MAU, and we crossed 100 million monthly active users for the first time on the website. And of course, we're doing a lot of work with product-led growth to drive journey users to some of that value that drives conversion. So that's all we're doing on the go-to-market side. On the side of product innovation, you know, our strategy over the last couple of years has been to make PDF the starting point of a workflow, right? And so that's why we integrated Sign directly into that so that people could use their PDFs and start a transaction for their business. And that continues to grow very nicely, and it's a great selling point for an integrated service. We also introduced link sharing a few years ago for commenting and reviewing with groups and teams. We saw that link sharing grow 300% year over year, so that's a huge point of value. But it's also a huge point of viral growth. That's also what, you know, when someone receives that, it's another opportunity for us to bring them into the value of the broader offering. And you can expect to see that with AI Assistant as well. You know, obviously everyone's looking at AI Assistant in Acrobat. I certainly hope all of you are using it. It should make your lives more effective. Not just for insight, we think that there's a lot of opportunity for monetization of insight for AI Assistant on our core base of Acrobat users, but also for the first time doing consumption-based value. So the hundreds of millions of monthly active users of Reader will also be able to get access to AI Assistant and purchase an add-on pack there too. So it's a really broad base to look at how we monetize that. But it's also the start of the ability to take your conversation and generate emails and presentations and continue that process. So the combination of all of that is a really potent combination of go-to-market efforts and product innovation. So we continue to be bullish about this. So the second part of your question, we're as we've said multiple times on the call, we are very excited about all the innovation that's coming out. That's you know, just starting to ramp in terms of monetization and or still in beta on the Creative Cloud side. We expect that to come out in Q3, and we'll start our monetization there. So we continue to feel very confident about the second half acceleration of Creative Cloud.
Appreciate all the details there. Thank you.
Your next question comes from the line of Saket Kalia with Barclays.
Okay, great. Hey guys, thanks for taking my question here. Maybe for both David and Shantanu, clearly a lot of news around video creation using generative AI during the quarter, of course, with the announcement of Sora. You know, maybe the question for you folks is, can we just talk a little bit about how you think about the market impact that generative AI can have in the video editing market, and how maybe Firefly can participate in that trend?
This is a good question. Let's see.
Sure, Saket. I mean, I'll start and then David can add. I mean, firstly, I think the advances, whether it's in OpenAI or our own models, that certainly, you know, David and I have the pleasure of looking at, you know, on a weekly basis. The advances are amazing because you have to, when you're thinking about video, solve some other fundamental problems like physics, right? I mean, if you have somebody walking on a street, how do you make sure that they don't go through a building or go through the floor? And so
I think, some of those video advancements that we have seen within Adobe have really addressed some of those hard problems. Big picture, though, video, I think, will be even more of an accelerant for editing applications. I mean, I think this notion that, the next Oppenheimer will be done using, a text to video prompt is just, it's not going to happen, for decades. And so I think actually more so in video, there's going to be an accelerant for people saying, how do I get an on-ramp as it relates to, using text to video, and then, edit that using our applications. And so I think I'm really particularly excited about what we can do with Premiere as well as with, After Effects as it relates to video. So net, I would say, Saket, the technology is impressive. We have our models. We have integrated into our interfaces. We're also partnering. I had a really great conversation with Jensen recently about, what we can do as they are investing in video. Certainly, he would love to partner with us, and we're looking together to see how we can push the envelope on video as well, using their models, whether it's Edify or Nemo. And so I think really early days. We're seeing a whole bunch. I hope, and David mentioned this. Look at some of the lip sync stuff that we've done as well, which allows you to auto dub and translate into languages. So we intentionally released a little bit of that demo. So really great advances. But net video is going to be even more of a need for editing applications in order to truly take advantage of generative AI.
Yeah, and maybe I'll just add a few things. First of all, as Shantanu mentioned, the research in the industry and certainly with Sora is very impressive and exciting. It's also very consistent with the models that we're developing. So we think that there's there will be, as there was with imaging, there will be multiple models that come out, including the Adobe model, and later this year, and we should start to see a lot of innovation there, like we've seen in imaging. We've already started to sneak a couple things as Shantanu talked about, but you will see text to video capabilities from us later this year. But you'll also see it with transparency around the training data that we have. You'll see it with more, toolability and controllability. You'll see it integrated into our tools as well. Now, all of that said, I do want to be very clear with what Shantanu said, which is that we see the proliferation of video models to be a very good thing for Adobe. We're going to work with OpenAI around Sora. You're going to see us obviously developing our own model. You're going to see others developing model. All of that creates a tailwind because the more people generate video clips, the more they need to edit that content, right? So whether it's Premiere or After Effects or Express, they have to assemble those clips. They have to color correct those clips. They have to tone match. They have to enable transitions. So we're excited about what we're building, but we're just as excited about the partnerships that we see with OpenAI and others, coming down this path. And if you take a step back, you should expect to see more from us in the weeks ahead with imaging and vector and design, text effects, and in the months ahead with audio and video and 3D. We're very excited about what all of this means, not just for the models, but also for our APIs and our tools.
Super helpful. Thanks.
Your next question comes from the line of Alex Zukin with Wolfe Research. Please go ahead.
Hey guys, thanks for taking the question. And mine is going to be more of a clarifying question because it's clear that from a number of comments, whether it's outperforming digital media ARR in the quarter, to accelerating creative ARR in the second half, to maybe doing better than 1.9 in the full year for digital media ARR. My question is very simple. Can you reiterate, not update, but reiterate the guide that you gave in December for digital media ARR in net new specifically for this year, and maybe puts and takes around how we should think about, to the question earlier, the second half versus first half tailwind, headwind around pricing?
Yeah, so we take our guide seriously. Q1 played out as expected. It was ahead of where we were last year. Our Q2 guide is ahead of where the guide was in Q2. We're talking about acceleration into the back half of the year. If I didn't feel like our full year guide was achievable, we would have a different conversation. We're confident in the targets that we put out there, our ability to meet them. If there's an opportunity to do better, we certainly will. So we feel good about where we sit in the first half. And as we look forward into the second half, the momentum we see from an innovation standpoint, integrating into our products, what we see going from beta to GA, we feel good about the momentum into the second half.
Perfect. Thank you, guys.
And your next question comes from the line of Karl Keirstead with UBS. Go ahead.
Thank you. Dan, maybe I'll continue with this subject that Alex was getting at. So I think what's tough about modeling ARR of late is it's very difficult to see the impact of the price actions. It feels like a black box to us. So I'm wondering if you could help us get aligned for the second half and offer some qualitative color on the extent to which the prior period price actions roll off. Is that more of a 3Q or 4Q phenomenon? Is there any way you could help size that impact, just to feel good about David's earlier comment about that roll off being a big part of the second half ARR acceleration? Thank you.
Yeah, so there was 2 pricing actions that we had taken in 2022. In May of 2022, we pushed forward a pricing action, and then October of 2022, we pushed forward the Doc Cloud line optimization where we integrated Sign. The 1-year anniversary of those pricing actions from May of 2022 and October of 2023, October of 2022 will be behind us on the 1-year anniversary. So you will still see some Q3 impact from pricing actions in the year ago period. Q4 will be a clean look for the company. At least 2 months in Q4 will be a clean look. The actions that we're taking right now from both a pricing and a product standpoint on the creative side will be more apparent in the back half of the year into the end of the year.
Okay.
I think the other way I would look at it, honestly. Sorry, go ahead.
Go ahead, David.
Well, the way I would look at it in terms of the rhythm of the numbers and how you've seen sort of what transpired in 2023 and how we look at 2024 and the path to, 1.9 and beyond. The way I would look at it is we're ahead in Q1. We're ahead in Q1. We're giving you all the reasons why we think, there's more product coming and more monetization coming in the rest of the year. And, that's what gives us the confidence associated with the targets. I guess there's this question of at every quarter, do we reiterate targets? Do we update targets? What does that mean? And the way we've always thought of it is if there was a way, if we didn't have confidence, we would give you that. We have confidence associated with the numbers, but we're not in the business of every quarter looking at every number. And let's go down one other number, which was the GAAP EPS. Certainly there's an impact, as you know, in the GAAP EPS associated with, what we did as it related to the Figma, sort of transaction, and therefore the impact to GAAP EPS in Q1. So, I think from my perspective, the quarter and the year is playing out just as we did. And, I feel more confident now than I did when we gave you our annual targets. I'll leave it at that.
Yep, you got it. Thank you.
And we will take our next question from the line of Jay Vleeschhouwer with Griffin Securities.
Thank you. Good evening. With respect to Firefly, it's obvious that you are significantly ramping up your investments there, at least judging by the number of relevant open positions you're looking to fill for Firefly development, many of which are seemingly fairly senior. Could you comment on your pipeline of able to bring in the requisite amount of developmental capacity to support everything you're doing with Firefly and everything else that David in particular talked about? And relatedly on go-to-market, in the last few months, you've been opening up the aperture for sales positions globally. Could you comment on what the thinking is behind that? And again, whether the population is there for you to bring in to meet your sales headcount needs. Thank you.
Yeah, let me take the first one, and Anil can answer the question on sales. As it relates to the momentum we're seeing with Firefly, I think there are multiple layers of it. One is obviously we're seeing the quality of the models. We're seeing a differentiated approach as it relates to the training data, as it approaches contribution of assets from our community and how we compensate those folks. And so that's not just an Adobe perspective, but it's playing out obviously in enterprises as they look at what are the models that they can consider using for production workflows. We're the only one, with the full suite of capabilities that they can do. It's a really unique position to be in, but it's also being noticed by the research community, right? And as the community starts looking at places, as if I'm a PhD that wants to go work in a particular environment, I start to ask myself the question of which environment do I want to pick? And a lot of people want to do AI in a responsible way. And that has been a very, very good opportunity for us to bring in amazing talent. So we are investing. We do believe that we have the best, one of the best, if not the best, research labs around imaging, around video, around audio, around 3D. And we're going to continue to attract that talent very quickly. We've already talked about we have the broadest set of creative models for imaging, for vector, for design, for audio, for 3D, for video, for fonts and text effects. And so this gives us a broad surface area to bring people in. And that momentum that starts when people coming in has been great. The second part of this too is managing access to GPUs while maintaining our margins. We've been able to sort of manage our cost structure in a way that brings in this talent and gives them the necessary GPUs to do their best work.
And regarding the sales positions in enterprises, in an enterprise, we're in a strong position because this area of customer experience management, it remains a clear imperative for enterprise customers. Everybody is investing in this personalization at scale in content supply chain. These help drive both growth and profitability. So when you look at these areas, these for an enterprise perspective, these are a must-have. This is not a need-to-have, and that's helping us really attract the right kind of talent. We just onboarded this week a VP of sales who have prior experience, a lot of experience at Cisco and Salesforce, etc. So that's an example of we're really bringing on some excellent enterprise sales talent.
And I don't know if Jay, you were asking for building your model, or if you were looking for a job. But if you're interested in any of these positions, let us know.
More the former.
Okay.
I missed that joke.
Hey, operator, we're coming up on the hour. Let's try to squeeze in 2 more questions. Thanks.
I didn't get that joke at all. I didn't get it.
Thank you. We will take our next question from Kash Rangan with Goldman Sachs.
Yeah, thank you very much. Looks like there's more trust in AI and Excel models than what you're actually saying qualitatively on this call. I just wanted to give you an
He's throwing shade to the analyst.
Debunk this hypothesis that is going around that AI it is generating videos and pictures, but the next step is it's going to do the actual editing and put out Premiere Pro user whatnot. So that is probably the existential threat that people are debating. So I wanted you to see if we could take a shot at why that scenario is very unlikely. That right now it's about generation of images, and then your tools pick up where the generation stops, and you do the processing, right? So help us understand why this can coexist with AI. That's a philosophical question. And Dan, one for you. Besides the net new ARR that you've already reported on Creative and DM, what are the other indicators, such as new business bookings, that you don't quantify necessarily, that you qualitatively saw in Q1 that makes you feel good about the year? Thank you so much.
Great. So maybe I'll take your first part. Dan obviously can take the second. So as it relates to generated content, I'm going to sort of break it up into 2 parts. One is around the tooling and how you create the content, and the second is around automation associated with the content. I think if you take a step back, before we even get into either one of those, there is no question that there's a huge appetite because of personalization at scale, the need to engage users, the need to build your personal brand online, that content is going to explode in terms of the amount of content being created. And it's going to explode because of one of two things. The first is around the ability to create audio clips, video clips, images, vectors. These are things that get users started. It's a great for ideation. You'll see in a few weeks that some of the incredible work the team has been doing around ideation on firefly.com. And once those things are created, they do flow into our tools for the production work and process. We're clearly seeing a huge benefit from that, because the more content that gets created, the more editing that's required, and that's what's driving more commercial CC subscribers this quarter than any other Q1 before. So that's the foundation of it. The second part of this, though, from an editing perspective, is the controllability of and the editability of not just pixels and vectors and timelines, but also the editability of the latent space itself. The latent space being the core core model capabilities that actually generate the output. We have a lot of research that we've already started releasing, the first of which was Style Match. And you'll start to see more and more of that actually coming out at Summit and beyond. But we are, in my mind, very, very clearly the leader in terms of creating models that can also be tooled on top of. So that combination of the models getting better and the controllability of those models, we're in a remarkable position for that. So we benefit from that. The second part, Kash, is around automation. So as people are generating more content, you clearly need to be able to automate that content and how it's created. And that's really where Firefly services come in. First, it's built on the strength of our Firefly models, safe for commercial use, integrated into our tools, but it also adds the ability to have custom models, so control what kinds of information or brand and content it's trained on for both brand styles and product replica. And it's also part of an ecosystem of API services, not just generate something, which is a core part of it, like text to image or generative fill or generative expand, but also process. So once you generate some images through APIs and automation, you want to be able to remove the background. You want to be able to blur the depth. You want to auto-tone. You want to apply actions to that image. And then the last is you want to be able to assemble that for delivery. Firefly services don't just generate something, but they let you have that entire ecosystem. And then you can embed that using low-code, no-code environments into your flows, and we are already embedding it into Gen Studio and all of the capabilities that we're shipping. So I think the core part of this is that as more of this content creates, you need more toolability. The best models are going to be the models that are safe to use and have control built in from the ground up, and I think we have the best controls of anyone in the industry. And they need to be able to be done in an automated fashion that can embed into your workflow. So I think all three of those vectors point to benefits for Adobe.
That's very compelling.
And then as we think about the forward-looking, a couple points I would turn to. You just think about cash flow in Q1. Strength of our cash flow once you normalize for the $1 billion termination payment % year over year. When you think about RPO, 3-point acceleration sequentially, and when I break that up on deferred revenue, unbilled backlog, you saw that acceleration in each of those subcomponents, which as you look through that acceleration, the near term underscores the strength of the business, and it underscores the longer term strength we have around the momentum of the business. When I think about individual product commentary, we talked about it a lot on this call. You see record commercial subscriptions in the creative business in Q1. You see engagement going up on the products. Usage of Firefly capabilities in Photoshop was at an all-time high in Q1. Express exports more than doubling with the introduction of Express Mobile in beta now, going to GA in the coming months. AI Assistant, Acrobat, same fact pattern. You can see that momentum as we look into the back half of the year. And from an enterprise standpoint, the performance in the business was really, really superb in Q1, strongest Q1 ever in the enterprise. So there's a lot of fundamental components that we're seeing around performance of the business that give us confidence as we look into the back half of the year.
Super. Thank you so much, Dan.
Mhm.
We'll take our next question from Keith Weiss with Morgan Stanley. Please go ahead.
Excellent. Thank you, guys, and I appreciate you squeezing me in. I'm going to take one last crack at this. Shantanu and team, like we definitely hear your confidence in the business, but obviously the stock market reactions reflecting investors are worried about something. And the two things that worry investors more so than anything is uncertainty, number one, and number two is back half ramps, right? And so I think what investors would really love to hear is Dan Durn actually say, you still expect to do 1.9 billion in net new digital media ARR and get some certainty there. And then also have a little bit more certainty or a little bit more explanation of what are the building blocks of that second half ramp. Like which products are expected to go GA? Are we including stuff like document intelligence? Is there new monetization avenues that we're putting into the back half? Or is there just some mechanism within sort of the Creative Cloud pricing that's going to turn on in the back half of the year? Like any further specification in there, I think would help sort of close the gap between your confidence and sort of the lack of confidence exhibited by the after-hour reaction.
And let me tackle that, Keith, and maybe I'll just tackle it by taking a couple of the other questions as well, summarizing that and ending with your question associated with the financial results. I mean, I think the first question that I hear across many folks is, hey, with the advent of AI and the increase in the number of models that people are seeing, whether they be image models or video models, does that mean that the number of seats, both for Adobe and in the world, do they increase or do they decrease? To me, there's no question in my mind that when you talk about the models and interfaces that people will use to, do creative content, that the number of interfaces will increase. So, Adobe has to go leverage that massive opportunity, but big picture, models will only cause more opportunity for interfaces, and I think we're uniquely qualified to engage in that. So that's the first one. The second one I would say is that, does Adobe innovate, and when we do that, do we only leverage the Adobe model, or is there a way in which we can leverage every other model that exists out there? Much like we did with plugins with all of our creative applications, any other model that's out there, we will certainly provide ways to integrate that into our applications. So anybody who's using our application benefits not just from our model creation, but from any other model creation that's out there. The way we first started to execute against that is in the enterprise, because for us, the enterprise and the ability to create custom models so people can tweak their models to be able to do things within Photoshop that are specific to a retailer or a financial service was where we focused. But long term, certainly, as I've said with our partnerships, we will have the ability for Adobe in our interfaces to leverage any other model that's out there, which again further expands our opportunity. I think as we play out the year, when we gave our targets for the 1.9 billion in ARR and the 410 million in digital media ARR for Q1, it factored in both our product roadmap and how things would evolve in the year. All of the product roadmaps, we knew whether it was Acrobat, whether it was Express, whether it was Firefly, whether it was Creative Cloud, or whether it's Gen Studio that brings all of these together. We knew the product roadmap, which we're executing against. In the first half of the year, a lot of that was beta, and in the second half of the year, a lot of that's monetization. It's playing out as expected. If anything, I would say the excitement around that, and in particular the enterprise, is faster than expected. And so I think our ability to monetize it just not just through new seats, but also through these new Firefly services is expanded as it relates to what we are doing. And then as it relates to your question around financial results and the go forward execution, we gave a Q1 target, we beat the Q1 target. And that gives us confidence that the financial target that we gave at the beginning of the year, we're ahead of that. And that's how I'll play it out. You're right, you have to model it. You can look at last year's model and say, hey, they got to 1.913 billion. if they're ahead. Does that fundamentally change Adobe's thesis on why we get to 1.9 and beyond? And in my mind, it doesn't. And so that's the way I would answer that question. We have to go execute against the opportunity that we have. I look forward to those who are at Summit. I'm sure we'll have a little bit more conversation, but Q1 was a strong start. It was a strong start against product execution. It was a strong start against the financial metrics that we outlined, and we're going to go do it again, Keith. So that's how I would answer your question. But thank you all for joining, and with that, I'll hand it back to Jonathan.
All right. Thanks, everybody. I look forward to speaking with many of you soon, and this concludes the call. We look forward to seeing you at Summit.
Okay. That's it. Boom, baby. There you go. Adobe. I thought there were some very interesting questions in that call. And overall, I think management did a pretty good job at answering. I don't think they messed up any of these answers. The big thing that I thought that was in the call was this idea around how do generative models particularly impact top-line revenue growth. And what I think the CFO and the CEO, or it might have been the COO, tried to convey was that these models are going to lead to an explosion of one thing, and that one thing that it leads to an explosion of is going to create massive amounts of growth for the business that's just getting started, which is content. The more models that are out there, even if there's a billion text to video models, there's going to be trillions, quite frankly, of small little videos that are popping up all over the internet. As a result, when you have these videos, whether you're a movie director or whether you're someone like me who wants to make a funny video, you're going to need to edit that video. Now, someone like me is probably not going to download Adobe Premiere and pay $30 a month because I don't need to edit it that intensely, but there's going to be many millions of people that are going to want sophisticated tools of editing, especially if they want to make those videos more high quality, even if it's not like a documentary. And Adobe Premiere is the best stuff out there, right? There's really nothing else like Premiere. Canva's video editor, I don't ever use it. It sucks. I use another video editor called Wondershare Filmora, but that's just to do very basic cuts. You guys watch my Palantir videos. There's like no editing. There's just some cuts in between. If you're actually doing high-level editing, it's Adobe Premiere. And there's like DaVinci. That's another one that's out there. But Adobe Premiere is kind of what most people use. Final Cut Pro as well. That's out there from Apple. So if LLMs that are going to create generative AI models that lead to text to video will only lead to more content, the macro argument is that more content leads to more people needing editing software. And that's kind of like the core thesis around why there's going to be top line growth. Now, the controversy here, or the tension during the call, was around this idea of, okay, is OpenAI going to benefit from that? Because Sora is going to be able to charge $30 a month and people create a video and then boom, they're not going to have to pay $30 to Adobe? Or is there going to be some synergistic, like symbiotic relationships between you guys and the LLM creators, the model providers? And so Adobe CEO had two responses to that. Number one, they said that they're going to be working on their own proprietary models as well. So OpenAI has Sora, Adobe's going to have whatever model they want to come up with, and that's going to be a direct competitor to Sora. And the differentiator here is going to be training data. OpenAI CTO, I'm forgetting her name, but she did an interview yesterday. It was a really bad interview with the Wall Street Journal. The Wall Street Journal asked a very basic question. They were like, hey, what do you guys use to train your models for for Sora? And she said, oh, publicly available like data. And so she was like, do you use people's like Instagram videos? Because those are public. And then the CTO was just like, well, I don't comment on that. And then she was like, well, you just said you use public videos on the internet. Instagram videos are public. So do you use people's public Instagram videos? And she wouldn't give a comment. And I think that's been the critique of OpenAI, is that they're not open at all, right? In the words of Elon. And they're kind of very sketchy in terms of how they explain how they train their models. One of the key differentiators the Adobe CEO said is that we're going to be incredibly transparent about what we use to create the training data that establishes the frameworks for these models to even be effective, which I think in the age of generative AI and transparency and regulations, quite frankly, does matter. And so as a result of that, they're probably going to be able to have a little bit more of a moat in regards to that training data. Because look, at the end of the day, if OpenAI is using videos from websites that have not licensed those videos, there's going to be lawsuits, just like there was with the New York Times. Whereas if Adobe doesn't have to deal with that, maybe that allows them to kind of avoid those things. So that was the first argument he made. The second argument he made, which he didn't make it official, but he kind of like just said that they're going to partner with OpenAI, Nothing was official, but he kind of just like, well, we're working with OpenAI. We're going to feed each other on our models. We're going to, kind of help each other out. He said, we're working with Jensen Huang. He name dropped Jensen because that's what you got to do if you're an AI company. Like, well, NVIDIA thinks that this is going to be a big space, so we're going to work with them. And it's like every AI company is working with NVIDIA because you have to buy their chips. So it's like, you're not working with Jensen. Like you have to work with NVIDIA, and maybe Jensen picks up your phone call, right? It's like, so I don't think that part of the answer was effective. I think the better answer he gave was that if there's going to be more models, there's going to be a need for more content. If there's a need for more content, there's going to be a need for editing platforms to make sure that content is actually like consumable. And that's where Adobe software becomes important. And so I think that, that is what I think was exciting in the context of Adobe. Battle Santa says it was just a disappointment from every direction. They aren't going to monetize their tools until Q3, so they won't even start making $1 on their new tools for another 7 months. Now, this is why the stock, this is a good comment, this is why the stock is down 10% after hours. So where do we have Adobe? You guys can see this, right? Yeah, Adobe is down 9.86%, 514. Does it pump back up to this 570 level tomorrow? I think it's going to be hard. And the reason it's going to be hard is because, as you said, during the call, one of the analysts kind of pushed back and said, hey, can you actually give us real guidance and not bullshit us? That's the TLDR of what he said. And the CEO got a little annoyed and he said, look, we've constantly said what our guidance was. We're not bullshitting you. And the analyst was like, actually, no, you're bullshitting us because these results are not what we think they are. And so there was a little bit of back and forth there. But the reason the guide is not as good is because of what Battle Santa says, which is that the monetization of these generative AI tools is not happening, at least for the next 2 quarters, if not, till the end of the year, because you got to work these things out. Sora is not released to the public yet, because I'm assuming when people get access to Sora, they're going to type in some wild shit. And it's one thing to get ChatGPT to say some crazy shit. It's another thing to get a video of some like pretty wild stuff that people will come up with to be able to prompt into those models. And I think there's a lot of like time you want to take on that rollout to make sure it goes right, especially if you're going to charge people for it. So it will take time, and the stock may lag for that. I don't see this thing as a high flying growth stock yet, because look, when I think of Palantir, I think, okay, every enterprise needs AI. They need a platform like AIP. They need to make sense of LLMs. I get that story. When I think of Tesla and I think of self-driving, I know it's not here yet, but eventually everyone in the world would want some car that could drive themselves, right? If it's safer, more effective, all that stuff. I get that thesis. With Adobe, there is a select part of the population that cares about editing videos. It's a big part of the population, but this is a company that's already worth $258 billion. I mean, like how big does that get? Does that become $1 trillion? Does a video editing software, which is really what Adobe is at the end of the day, become $1 trillion company? I don't know. So if you're buying Adobe at $258 billion, let's say they pump back to 570 tomorrow, $258 billion. Let's call it 250. They're $250 billion. You want them to get to 500 billion to get like a double, right? You want if that's what you're really looking for. How long does that take? Now they were 275. Right now they're 570. So they were basically half. They were, what's after 250? 125 billion in September 2022. Today is March 2024. So about a year and a half later, they've pumped 100%. So if you're looking for the next 100%, now they got to get to 500 billion. They're growing at 8% year over year, PayPal numbers. They're buying back $25 billion of stock. They could have bought Figma. They're buying back their stock. That's kind of a red flag in my opinion, because why can't you do something with that money other than buy stock? Good for shareholders, but if it's not increasing top line revenue growth, I think shareholders would rather you buy another company or something that does what it takes to really capitalize on generative AI. So I guess the question is, where do you see the price targets on Adobe going? I don't know all of their numbers, but it doesn't get me excited in the context of all the different AI plays that exist, because there's a lot of other AI plays. There's just so many other AI plays that are exciting. Generative AI in the context of video editing, I don't know if that's the most exciting. So yeah, I think that's the core thing. The call was good. It's not like it was a bad call. It's just, if you're investing in this company, you really have to have a thesis on where you think the media and entertainment world is going. On top of that, there's a little bit of a risk here in the context of where's Hollywood going, right? Because the bull case is that Hollywood's like not going to use, Netflix is not going to use video editors as much. They're going to use generative AI, which means there might be more demand for Adobe's software and products. The bear case is maybe there's not that much demand for like Premiere, which is their Premiere software. There's more demand for simpler things like just text to video, because you don't need to be that advanced if you're using AI to make a lot of this content. It's going to be really interesting to see how this plays out. Ultimately, I think Adobe's going to be fine. I think they're going to be a winner in generative AI because they have a pseudo monopoly on video editing, but it just might take time for them to ultimately monetize. Joshkin says, very hard to moderate what the image video generators will spit out when people want action scenes that include minor violence. Going to be interesting to see how OpenAI addresses those. Yeah, it's going to take time. And quite frankly, I'd rather have them take their time before they roll that out, because I don't think anyone wants to see something crazy. But like then it brings up the question of censorship. Like what stuff do you not allow people to? Because if you ban all violence, which is I guess reasonable, but there's a certain scene people want where there has to be some type of potential small amounts of violence. Like, do you allow that? Do you not? Like, there's a lot of these ethical questions that get raised, and Adobe has to figure that stuff out if they're going to put out models and they're going to compete with Sora, which, by the way, the moat is in the model. Like, I know they kept trying to say the moat is in the editing software. I think there is demand for the editing software, but the moat, in my opinion, is the model, because if OpenAI Sora has a really good model, then boom, people are going to go to OpenAI Sora. Now, the CEO's argument is, well, they're going to need to edit that video. I agree, but I don't know how many millions of people out of the total percentage, or how many billions of people will literally need to download Premiere to edit the video. There will be a fraction of those people that definitely buy a Premiere to edit their videos. I just don't know how many people would just type in the video, get the video, then post it, not need to edit it. Which is why, a lot of the tech platforms, I also think I'm bullish on Twitter, Instagram, because they're just going to get so much fucking content into the platforms, because people are going to make so much content in a much easier way. So we're going to see how that plays out. Did Adobe mention that the AI rules the EU adopted? They didn't talk specifically about that, but they did talk about how, obviously they couldn't buy Figma because the EU stopped them. So that was one of the things that didn't allow them to buy that company. Thoughts on Apple acquiring Darwin AI? I'll talk about it in the morning because I haven't researched Darwin AI too much, but I think it's good. Apple has a ton of money. They're going all in on Gen AI. They need to acquire more companies to help them further that goal. So overall, it's not the worst idea to me in the context of Apple trying to figure out how to further their AI moat, or at least enter into the generative AI space. All right, that's it for me. Thank you, everybody. Fun stuff. I think this earnings call was really good. It got us to understand a lot more about what's going on in the generative AI space. That's why it's always fun to learn this stuff. We just get smarter, right? All of us listening to what's happening. Adobe 513 right now, down about 9.9%. SoFi up about 0.35% after hours. Ulta Beauty, this one was down 6% as well on their earnings. Dollar General was down about 5% today. Tesla after hours 162, down about 0.11%. Apple up 0.31%, 173.53 after hours. Palantir 24.30. We got ARK Innovation down 3%. Will be interesting to see if ARK bought Tesla or SoFi today. SMCI down about 4.88%. Robinhood up 1.11% after hours, 18.25. And Palantir down 0.53%, 24.30. All right. That's it for me. Thank you, everybody, for being here. We'll be back on Finance Junkies 9 p.m. tonight. And then we'll be there for Friday. Tomorrow's already Friday, end of the week, for the market open at 8:45 a.m. That's it. Thank you, everybody. Have a good one. Good night, and I'll see you tomorrow morning. Bye-bye.